Good evening, students. So today we'll continue with the remaining portions of chapter number 2, your financial and accounting systems. So last class we covered what is meant by a system, what is meant by a process, what is meant by a software, how a software works, what is the difference between a cloud-based and a installed application, and what are the benefits and features of that. Then we covered the three-tier architecture of a particular application. Then we went on to the difference between integrated and non-integrated systems. Then we moved on to what is called as an ERP. What are the benefits of using an ERP system? What are the basic modules in an ERP system that every entity will be having? Then we went on to see the risk and what are the control measures while using the ERP systems. So today we'll continue with that. We'll continue with the role-based access. What is meant by RBAC for ERP systems? Then we'll move on to the different modules in an ERP system. This is a little bit, we have around 10 to 12 modules, but it's actually easy, not a very difficult concept as normally what people perceive. It's something easy if you understand the concept or understand the business. It is relatively an easy concept. Then we'll move on to the audit of ERP systems and then to reporting. Reporting, we'll start with MIS report, then data analytics, business intelligence, XBRL, and then we go to the regulatory compliance part. So this is just the overview of what we are going to have today. So we'll just start with the first, which is called as role-based access system. Now, I hope you all went through the study map for what all portions we covered last class. And I'm sure like you understood, like while reading the textbook, it was quite easy for you. If you have any doubts, I'll be checking in between. Kindly give me your doubts. Okay, yes, Harsh, yeah, I got one. Effective controls over your master data entry would be a 4i check. What? Okay. Normally, what happens is whenever you are making a control or if you are implementing some control at the transactional data level, what happens? Only that particular transactional data or that particular entry will be affected, right? So you can make changes to the corresponding transaction, but not to everything. But say, for example, it is like when you're using Tally, when you're making a change at the configuration level means in the sense the global settings level, then it will apply to all the entries or all the ledgers you create in that, right? It is not specific to one particular element. So if every time when you're making some changes or some controls you're applying at the master data level, that means it will have a more effective impact than if you make it at every transaction level. You have to make it at the master data level so that the whatever you are recording itself is correct. So mostly this is like your global parameters that you give. Yeah. So anyway, we'll be coming into the control parts also in the third chapter better. So we'll be dealing mostly with the different types of controls. So anyway, we'll be going through all this. So first what we are starting with this one is the role-based access control. So I have already covered in the last class. I told you ERP system is a system having a one singular unified database, right? It is a centralized system. Data is centralized. It is not spread across different departments. Now, what happens when your entire data is in one single database? Is it an advantage or a disadvantage? It's an advantage because I told you there are many advantages. Less redundancy, less duplication of data, better communication, I told you, right? And also we have a less mismatch of data. So we have lots of benefits, but there are also certain disadvantages. So what are the disadvantages? Say for example, you have all the data in one single database with respect to inventory, with respect to the sales orders, with respect to your employee details, payroll, all the details are there in one single database. Now, say for a HR person from the HR, he will also be having access to the inventory data. He'll also be having access to the total profit. He'll also be having access to the data related to different products or maybe sale or revenue related to different products. And these are actually not required for a HR person, right? For a human resource personnel, these details are not required. he needs to get only information relating to the employees, their IDs, their payroll structure, their attendance. He needs only those kind of information, not the others. Now, what happens if he has access to that? There could be chances of misusing the data or unauthorized access to the data, right? So for such or to prevent such a scenario in a ERP, though we have one single database, we can put in role-based access. Role-based access in the sense, who is accessing what? Need to know, need to use basis. If you need to know and if you are required to use that particular information only, you will be allowed to or will be authorized to access that. Say in this case, a HR person doesn't want or doesn't require any information related to the stock or inventory, right? So he need not actually access that. So for such kind of, or for such, in order to implement such kind of an access, we put or we initiate something called as a role-based access control. Depending on the role of the particular user, what is his actual need, what is the particular usage for that particular access, why he requires that access, he can be given a access. Now, this role-based access can be either a discretionary one or a mandatory one. So these are slightly different, discretionary and mandatory, both are access only, but the way in which both are implemented is different. So now understood what is the need for a role-based access. Since all the data of the entire entity is stored in one single database, there could be chances of misuse of data or chances of people or unauthorized persons having access to the data, which is not actually required for them. So in order to prevent that, we put something called as role-based access. Only those who has access or those who need to know can only access them. So here the key word is need to know and need to do basis. If they actually need to know what is the data about and if they are actually using it in their part of their work, then only the access will be granted to them. It could be either depending on the role. Say for example, junior accountant, senior accountant, finance manager, consultant, your CFO, different roles will be either depending on the role or what is their exact duty. Say what is a function. Say for a junior accountant, he need not get all the access. He has access to put in the journal entries, do the ledger posting and also the trial balancing. But he need not have the print access or any other access. But for a CFO, he is not going and actually creating or even altering any of the ledgers. So what access he needs is a print access or a read access. He need not have the create or alter access. So this creating the particular account heads, entering into the corresponding account heads, and also any changes, making any changes in the transaction, all this will be done at the accountant level. So he will be needing an access which is called as a create, alter, etc. He may not need a print access because he doesn't have to take the reports or financial statements as such to view. But say at a consultant level, he may not need the print access, but he may have to have the read access. He is going to analyze the entries. He may need a read access. He may not need a create or alter access, but a read access. And also not a print access. But if you go to a CFO level, he may not need a create, alter, or any other access. All that he needs is a read and print access. So depending on what is your role, you will be granted the access. Similarly, a person from the HR means he need not have any entry or any authorization to view the data related to stock. So he will be given access only to those masters related to the HR department. For example, payrolls or for example, employee details. Only those he will be having the access. Yeah. So even though all the data is in one single database, through proper role-based access control, you can actually prevent who is accessing what. Here, one greater level of security is made sure here. Now, role-based, now this is also another important question for your examination. Now, this is important. What is role-based access of an ERP and what are the two types? Now, two types are, one is a mandatory access and one is a discretionary access. Now, I'll ask you a question. Say, for example, those which is relating to your security aspect, national security, okay, military, national security aspect. Now, I haven't taken this portion, I'm yet to tell what it is, but I'm just asking you, say whether you are able to understand from the word meaning. those elements relating to your national security and military aspects. Now, which kind of access do you think has to be given? Mandatory access control or discretionary access control? I haven't explained, but I'm just asking. I'll just see. Which one do you think for your military operations, for your those elements involving national security, which will have more predominance, mandatory or discretionary? Shubham, I had just started. I'm only doing chapter 2. Chapter 2, actually, I started with a recap of what we covered last class. Okay, that was the first portion. Okay, Radha. It's like a teacher who can give punishment to a student, principal can only call for the students. Okay, I'm actually happy you are getting such real-time examples in all the classes. Okay, I need to do. Okay, so what is the example? Which one do you think fits into these kind of military operations or those involving national security? Mandatory or discretionary? Yes, it is mandatory access control, right? It is mandatory. I'll tell you what is a discretionary. Actually, if you have given one or two papers, since I've actually given discretionary, discretionary may sound similar, but it is different actually. Now, mandatory access control is normally a person, say for example, it is mainly used when none of the persons can access that particular resource or that particular data. It is not required for them. So it is like mainly those entities that is dealing with the security aspects, those which are very highly confidential information, high top secret information that you don't want it to be leaked in any other way. For such kind of information, you go for a mandatory access control. So here the access control will be done at the operating system level. There will be a system administrator. The system administrator will be setting the necessary control measures in your system, and those persons who are having a particular level of security clearance will only be able to access that. So say for example, especially in for dealing with inter-country agreements or between two countries, if they are entering into any sort of an agreement. So, or pacts, these are highly top confidential, very secret information. This should not be leaked at any, for any particular circumstances, this should not be let out. So, in such kind of cases, they go for a mandatory access control. So, here there will be a particular authority, a central authority will be there, and they will have a system administrator who will be actually having different control measures, different multiple levels of security will be there. Only those persons who actually have the security clearance, they can actually enter the system or they can view the data. So this is mainly for very, very secured information. So this is the most highest level of control that you can put. Mandatory access control, very, very strong. But at the same time, lot of effort, lot of time is actually involved in putting this kind of a control. You need to monitor it continuously, right? So every minute it has to be monitored. So this kind of control involves lot of time, lot of effort, but the most effective type of control. Clear? This is mainly done at the operating system level. Now, just see this how this particular for all the different types of information, top secret, confidential secret, only a particular person who is having a clearance, maybe only the senior level employees who are working on that particular project or who has been attributed to that particular data will only get access to that. Now, this is with respect to mandatory access control. Very, very high level of security is ensured. Second is called as your discretionary access control. So what is meant by discretionary access control? So here it is at the individual level or at the resource level. Say for example, a particular, I have created a file in my system. I have created a file in my system. Now, there is a possibility or there is a facility that I can make it password protected. Yes or no? I can make that particular file password protected. Similarly, I'm sure like whenever you have your systems, if some of your cousins or someone else wants to use your system, there'll be a guest login, right? You'll be giving a guest login. So they can actually enter through the guest login and they can use the system. So your data or whatever resources or whatever files you have kept in your login will be untouched. Now, even say for example, if you are creating a file, a Excel file. Now you can protect it with a password. You can set who can view that, right? You can create a list, access control list. Who can see what in that? Who can see what all the files, who can view the files. So this list can be created, and those persons who wants to see that only will be able to see, whom you give the permission. Say I'm sharing the password with another person, he can view that particular Excel. Now it is at your discretion. This is not at a particular regulatory authority level. It is at your discretion. Whomever you want or whomever you authorize to see that information can see. So this is at an individual level. It is at an individual level, not at an operating system level. Now, this is actually less, less secure than your mandatory access control. Less secure in the sense, it is easy to implement it. Whoever you want or whoever you give the access can access that particular file or data. So this is less time consuming, less effortless also, but security is comparatively lesser compared to your mandatory access control. So here people can misuse the information you give them. So it depends on how much you trust the people or who is eligible to view the data. It depends. But mandatory access control means only those persons who are having a clearance can enter, and it is actually taken at the system administration level, at the operating system level. This is at the user level. Which resources, say if you want to allow someone to access a printer, you can give that. This is at your discretion. It is not at the OS level. Yeah. So there are two basic access, discretionary and mandatory access. Both come under a role-based access. So in a ERP system, you can actually implement a role-based access. Either it could be mandatory or a discretionary control. Okay? Both are there, and mandatory is the most secure thing, whereas discretionary takes less time, less effort. Mandatory is at the operating system level. Have you all understood this? Yes, are you able to follow? Yes, mandatory is kind of compulsory. Mandatory is kind of compulsory. Page number, 1 second. Let me just check it out. I'm not sure of the page number. Just wait. I think it starts with a topic called as role-based access in your ERP. It comes under, I'm not sure about what is the page number in your textbook, but anyway, let me check. It comes under 2.30. 2.30 is a page number. Yes. Yes, understood. Okay. Example for a Mac. Okay. Okay, I think Radha, I have to share this particular example with others also. Example for a mandatory access control. Okay, mother making savings out of the father's money or from her own earnings, which is ensured by a high level of security hidden at a house at a very confidential place. I actually don't get how you are getting such examples throughout the class. Anyway, it's so interesting. Mandatory is kind of compulsory. Yes, that has to be there. Okay, at the admin level, it has to be there. Discretion is at your choice. You can do it. So, yeah, it's understood. Yes, good. Now, second is types of access. I think this we actually gave in the beginning. When I told role-based access, I told. So while I'm giving access to the master or transactional data or even to the reports, I can give 4 different types of access. One is a create access. I can actually put in my journal entries, creating the data. Second is alteration. I can make changes to that. I can view. That is, I'll be able to read whatever is being already entered by the staff or by the corresponding department employees. And the print. Of all the 4 are different types of access: create, alter, read, view, and print. So 4 types of access basically under your role-based access. Yes, 2.30. Thank you, guys. Now, next is called as your ERP. So next we are going to audit of ERP. So first we saw what is a role-based access in an ERP. What is meant by role-based access? What are the different types of access? Mandatory and discretionary, and also what are the different types of access in a role-based? There is different types in the sense create, alter, view, and print. So basic two bifurcations and what are the different types also we saw. Now next we'll be moving to audit of an ERP system. So audit of an ERP system, before starting the audit, we'll just have a small overview of the controls. Now this particular topic in the third chapter will be dealing only with controls. So by the time you read the third chapter, control, that name itself becomes like every now and then we'll see different types of controls, managerial, application. Finally, you won't remember any control, that's a different thing. But that whole chapter is with respect to controls. Okay. Now, so I'm not going in depth with this particular control part, but basically there are two types of controls. One is a general and one is application control. And under general controls, you have management and environment. I'll tell you what each is. Now, general control is some kind of control that is not specific to one particular application. So, example is, say for example, you have a door lock. In your house, you have a door lock, or you may have a CCTV surveillance within your house. Okay, so the CCTV surveillance will be there. All the rooms in your house is covered by the CCTV surveillance, and also you have specific lock for your safe, right, where you keep your jewelry, or maybe even for the refrigerators, you have a separate lock system for that, right? Now, out of this, which do you think is an application control? Application will be limited to that one particular application. Now, there are two examples. One is a CCTV surveillance and another is a lock for your particular safe where you keep the jewelry. Now, which comes under your application control? Just to understand, drive in the concept. General controls are not limited to one particular application at the overall level. Application controls is, it is limited to only one particular application. Only that particular application it will protect. It will be free of risk because of that particular control. So say for example your CCTV surveillance, which it falls under general or application controls. Yes, lock for the safe. Okay, so what kind of control is it? Is it general or is it a application control? Yes, application control. Okay, okay. Application control. Say for example, it is pertaining to that one particular application. Say I have CCTV camera in all my rooms. Every room at the pivotal points are placed a CCTV camera. It is getting a full coverage of the house. Okay, all the rooms are being viewed in through that. Now I have a refrigerator or a safe where I am having a lock and key system. I have a lock so that I can secure that particular application alone. It is not in general. Okay, so even if someone comes, if they are say some pilferage or some theft is happening, they will be able to carry out. I mean, other appliances or other cupboards which doesn't have a lock, they'll be able to seize from that. But for this particular safe, it is secured by means of a key. Now, this is called as an application control. It is specific to that one particular application. But yes, CCTV is a general, very good. CCTV is a general. It's not an application control. It is a general control. It is applicable to all the rooms in your house. It is giving a coverage of the entire thing. Whatever is happening in the house, you have a coverage of that, right? So it is a general control. Now, this application control cannot function effectively without a general control. Yes or no? Say you have a safe. You have secured that particular safe with a lock and key. But say, for example, there is some theft happening. That particular safe, they are not able to open. Fine. Safe. But all the other things, what are there in the house, your electronic equipments, all the things are being stolen. Now, Without a proper general control, will the application controls alone be effective? No, right? In order for your application control to be effective, you also need a proper general control, effective general control. Say what happens if your general control CCTV camera in this particular example, if it is there, even if some theft happens, even though it will not be able to prevent that and that particular occurrence, it will be able to detect, right? It will be able to detect who has carried out that particular theft. Yes. So next time you can prevent such things from happening. So for effective working of your application controls, you also need a strong general control in this. Now this is just for two basic idea. We'll anyway cover it in the next class, next chapter, what is meant by general and application controls. Now under general, you have management and environmental controls. Environmental controls will always be lightning, arresters, your stabilizers, all those things will be there. Management controls means it is at the management level. Their governance, their policies, their organizational structure, their ethical values, all these things will come under your management control. So next chapter we have managerial control, environmental controls, all elaborately. So I'm not going and discussing in detail here. Okay? Yes. Okay, Radha, I think there's another example from you. Yeah. Yes, of course, the surveillance, CCTV surveillance is done by your parents, of course. That has to be there, right? So, yeah. Now, next is audit of ERP systems. Now, this is another important topic. Kindly mark this as important. Audit of ERP systems. Now, ERP audit, basically we have two types. One is audit of data and another is audit of process. Now, within audit of data and audit of process also, we have two different bifurcations. Just give me a second. Yeah. Under audit of data and audit of process also, we have two different bifurcations. So within data means how you are auditing the data elements, how we are auditing the data, and one next is how each and every process is being audited. So a process could be a sale, it could be a purchase, or it could be something related to payroll. So how each and every process is audited and how the data is audited. So say for example, at the data level, how we can audit data. Say for example, first is physical safety. Physical safety means what? How the data is protected. So whether if it is in your system. So how is physical safety can be ensured? Proper access control. I told you it is a single database, one single database having all the data. Now, how do you ensure some kind of safety for this particular database? You have to make sure that there are proper access controls defined. So with respect to data, as an auditor, as IS auditor, you have to check whether there is a proper physically, the data is kept secure. And also if the data is at a particular common place where it is accessible by all the departments, all even unauthorized people are having access to this data, whether there are proper accesses defined. Example is our role-based access. What type of access is defined? Here access control means access based on the role, need to use and need to do basis. Whether proper access is defined and whether physical safety is ensured. Now, coming to audit of process. Audit of process means you will be checking at the process level, not at the individual data level, at the process level. So, at the process level, there are two types. One is functional and one is your input validation. Now, functional means what? What do you mean by functional audit? Functional means there are different functions, right? Your salary computation, your sales, your purchase. At each of the process level, you have to test whether this particular process is being actually carried out, what is expected and what is being carried out by the ERP system. Say if it is a purchase, what is expected out of the ERP system? It is not just purchase. First, they have to get in the purchase requisition, then the purchase approval approved from the respective authority. Then they have to call for quotations, tenders. Out of the quotations, whatever they are calling, they have to select the quotation having the, based on the quality and the amount, they have to select for a quotation, and then only the particular order is given to the vendor, right? So there is a series of process that is happening, even it is just one single function called purchase. So in the functional audit, you will be checking whether this particular function is actually done as per what is being intended. What is being done by the ERP is actually what is being intended, or what is the actual process is being carried out by the ERP. So this constitutes your functional audit. Now, even in your functional audit, the system, there is a, there is something special about the system. When you say everything is automated, it reduces human error. So I told you, when system, one of the main reasons why everything is automated is actually the number of transactions are more, or when the number of transactions are more, the system will process it at a speed, at a very high speed, than it can be done by humans. And even your clerical errors or your mistakes, whatever we make, will be less. But that doesn't mean whatever the system or whatever result the system is producing is correct. No. Right? So whatever, if you are giving in a wrong input, obviously you'll be getting a wrong output. There's no doubt about it. Similarly, even if you are giving the correct input, if you are doing the wrong processing, or if you are doing the wrong programming, you'll get the wrong output. So your output will depend on what type of input you give and what type of process or programming you have. Checks about the programming part, whether the ERP is doing the function as per what is being programmed, or what it is supposed to do. Now, how will you check whether the data you are giving is correct or not? Your output can be wrong either because you are giving a wrong data, or the system is processing the correct data wrongly, right? Even if you give the correct data, it is processing wrongly. So either way, you can get a wrong output. Now, functional audit checks whether the system is processing correctly or not. That is done. Now, second is what? You have to check whether whatever data you have given is correct or not. So, input validation level, you check, or it is mainly setting the rules. First, say for example, if you are giving a date, in a format other than that is required at the report level, say you have to give in a date, month, year format, DD, MM, YY format. But you are giving a date just like say 16th April, just without a year you are giving 16th April. Now then it should throw an error. Or say for example, though say it is asking for, there is a field called mobile number. In that particular field, you have to enter only numbers. Say you are entering alphabets, then it has to throw an error. Yes. Similarly, you have a PAN number. You have to give your PAN number. You can have alphabets as well as numbers. In that particular field, you are trying to enter a special character. What happens? It should throw an error, right? Now, these are all called as input validations. What are the checks that the particular system will perform when you are giving a wrong input data? So, input validations are very, very necessary because error can happen at the data level, wrong input as well as with the wrong processing. So in order to curb the wrong processing, we have the functional audit, and in order to make sure you are entering the correct data, then you should have a proper input validation. Okay. So ERP audit basically checks your data and the process. Audit of data will be there, audit of process will be there. Under audit of data, you have to ensure physical safety of data, as well as how you are ensuring the physical safety of data through proper access control, through proper role-based access control. Need to know and need to use basics. Now, how do you ensure the audit of process? Making sure whatever data you are entering is correct, it is as required for that particular function, and the function is also being done correctly. So functional audit, you will compare whether the function is done as desired, or what should be the actual output and what it is carried on by the ERP, both are comparable. Input validation, you will check whatever data you are giving is as required by the system. So say for example, if certain elements of data which is not required, which is wrong data, if you are entering, it should throw an error, or there should be an error. Clear? So audit of ERP system, again another examination question, mark this as important, audit of data and audit of process. Understood guys? Are you all able to understand till now? make the physical safety of data. I'm actually not going in depth because the next chapter is fully related to the safety aspect. So that's why I'm not certain topics. If I'm not expanding, don't worry. We'll have that in the third chapter elaborately. Okay. So we'll be anyway covering that. What is it rather? I didn't get you. How the process integrity calculations. Can you repeat your question? Actually, I didn't understand the question. Okay, you are asking about the functional audit, I guess, right? Say, for example, we have a sale or we have a purchase. So whenever we are doing the audit of a ERP system, we have to go through we have to do a walkthrough. Walkthrough means starting from how a particular transaction is entered into the system, how this particular transaction is processed at different levels, and how we are getting the output. So wherever, whichever department uses that particular data, or whichever, say for example, if you are considering your sale or purchase, how this particular date entry is being processed at different levels. You have to go. So you, when, say for example, in our regular audits also, what we do, reperformance we do, right? So we actually do it independently, and then we check whether whatever we have done is same as what the management has recorded in the books, right? So it is again performing it independently. So here also we'll go through the walkthrough, a case by case scenario. A particular transaction we'll take, we'll follow it from the beginning till the end. We'll see how a particular function is being done. Now then it will is compared to the actual or expected behavior. So if it is comparable, then yes, of course, your process is working fine. Say for example, with respect to a inventory, with respect to a new stock, a new item being purchased. So if your ERP systems, I'll tell you about integration of ERP systems. All the different modules will be connected. Okay, so the data will flow from one module to another. Say for example, if you are buying stock, now it should be updated simultaneously in your material management module. It also should be intimated to your stores, and whenever there is a particular sale happening, that amount should be reduced from the total stock. So there are various places where the effect comes. So when you are taking a particular process, go do a walkthrough end to end, how each and every module will reflect that change and how it is expected. So if both are comparable, then you can be sure that the particular process is working fine. Yes, then you have to make sure that normally what happens whenever there is a lack of control, you give a internal control memo or a letter of weakness. Normal audits we do, right? So it is a weakness. You have to make the management understand there is a weakness in the internal control. Make sure they are mitigating that. I'm sure risk you cannot reduce, you cannot eliminate. I hope everyone knows there is an element of risk that is always there. So only thing that you can do is you can mitigate that risk. You can lessen the severity of that particular risk. So if you find during the course of audit, if you find that the controls are weak or there is some deficiency, you have to immediately let the management know, make sure that they are having some mitigating plans. If not, you have to. Okay, if the input validation isn't processing, no, process integrity only we are checking through the functional audit. Functional audit, what we are doing is we are checking whether that particular process is being done correctly or not, right? So we are checking how the system is processing this particular data and how actually it should be. Say if this particular system is processing what is the output, when what is the actual output that is required, that we are comparing. So input validation checks the correctness of the data. The process will be checked by the functional audit. So both will be covered. I hope that's what you're asking, right? Okay, fine. Now just go through this particular MCQ. Audit of process. Okay, just now we covered audit of data and process, which falls under audit of process. Yes, Hungary, that's correct. It's your input validation, right? Your physical and access control comes under the data part. Your processes it is your access control. Yes, yes, it's correct. It's D. That is your input validation. Yeah. Okay, right. Yeah. Now, okay, I think this we already covered. Basically, the entire process through the source, how it comes to your financials. Okay, this I think as commerce students, I need to teach you this. Okay. Now, basically, depending on what is the type of business, what is the type of business? Your business process module. I told you ERP system, they'll have a single database, different modular design. I told you modular design. Modular design means what? They'll have different modules, right? So different modules will be based on what is the nature of business. Say if it is a trading concern, if it is a manufacturing, or if they are a service providing concern, depending on what they are providing and what is their business, they'll have the modules accordingly. They need not have all the modules, right? Say for example, trading concern means they are not into any manufacturing, just buying the goods and selling it. So they need not have any module for manufacturing. They need to only have for purchase and sale. There is no module for manufacturing or production. Yes, it is only purchase and sale. So that module you can eliminate. So depending on that, your normal business is differentiated or categorized into three: trading, manufacturing, and the services. So depending on this, you can include or exclude the modules as required. So it depends from one particular business to another whether they require that module or not. Now, say in your trading, just purchase and sale of that. There is no conversion of your raw material to the finished product happening. Whereas in your manufacturing, there will be raw material, work in progress, finished goods. Then it also includes your sale. So here in your manufacturing sector or in your entity or a company dealing with manufacturing of a particular product, they'll need the complete inventory module. They'll also need the production planning module. So all this will be required for your company involved in manufacturing. Whereas if it is a service providing company, service means, for example, what those provided by your architects, lawyers, doctors, service provided industry, they'll have a separate set of module, right? They need not have the inventory module. For them, there is nothing called as an inventory module, just purely service, right? So depending on what is the sector or what is the business activity they take forward, they'll have the corresponding modules. Now, we'll just go to what are the different types of modules in an ERP system. I think last class we discussed the basic 7 modules, right? We have basic 6 to 7 modules. I told you it will be there in all the different entities. You have your customer relationship, supply chain. So in addition to that, we have various other modules. Now, before starting this ERP modules, now if you see your textbook, don't get tensed when you're seeing that. Very simple topics only. Understand the business, understand what is the actual purpose of that particular module. There's nothing so difficult in understanding this. Only thing is that we have listed a few modules. Other than that, it is like not very difficult. They can ask 1 or 2 modules are really important. I'll tell you what it is. But other than that, it is not difficult to study all the modules at a stretch. One round of reading itself will do. Now, first we'll start with these are the functional modules. Depending on the function, whether it is trading, manufacturing, or service, they will have different types of modules. Okay. Now, this first one will start with the financial and accounting module, and then the controlling module and few other modules. And now this financial and accounting module, mark this as important, very, very important. Okay, now this and controlling module, both together, very important. Controlling module is a module that was added recently. So you can give special importance to that, because since it is added recently, there are high chances it can come in your exam. Now, financial accounting module. We all know every company, the backbone of every entity or company is what is the finance. So this is a basic module every company will have. Without this particular module, I don't think any company exists. This is a basic backbone of any particular company. So there is a most vital module of any particular ERP system, that is your financial and accounting module. Now, in your financial and accounting module, you'll see what are the different functions or what is being taken care by this particular module. So you know what are the main functions of a financial module: tracking the transactions, recording of transactions, processing the transaction, all will be taken care by the financial and accounting module. And I'll be just giving you an overview. I'll be explaining all the terms, giving you an overview. But certain I'll be skipping a little bit fast, because it's not because of limitation of time, but you need not actually go in depth with certain areas, but certain I'll be going in depth also. So just if you have your textbooks with you, kindly mark that, or even you can listen to it. No issues. You can, but the same day when I'm teaching the modules, kindly go and read that. It will be effective. Now, financial accounting module, first is tracking the flow of financial data. Of course, you know, you can track the flow of financial data, integrating all the information. Now, integrating all the information means this financial accounting module will have access or will be integrated with different modules. Say with respect to sales, whenever a particular sales happens, that invoice details should go to that invoice details will come from your financial module. So different layers, it will be integrated with your sales, with your purchase, with your stores, with your HR for your employee payroll, for their salary computation, and also with your statutory, say for example, your TDS, tax computation. So different modules will have access or will be integrated to your financial. It is not a standalone module. So this data will flow across different modules. Say you have to raise an invoice. Again, it will be coming from this particular module. A sales. Now, there is a particular amount to be paid to a particular vendor. From the purchase, it will go to this particular module. So it is integrating all the information. Then creation of an organizational structure. So what do you mean by an organizational structure here? What is meant by organizational structure? Say in Tally, if you open Tally, if in the gateway, first thing is they'll ask for a company, right? You have to create the company. There will be a list of few companies, or if it is already defined, there will be a list of companies. You have to select it from that. Or if you are starting it for the first time, using it for the first time, you have to start a company. And once you start a company only, you will be able to define the master transactional data, everything. Yes. Now, creation of organization structure is even within the ERP system, within your financial accounting module, you have to go ahead and define the company. Company codes in the sense, say they have different branches for that particular company within India, 5 to 6 different branches. Each and every branch will be defined by a particular company code. Say holding, subsidiary, all these things will be defined by a separate company code. So creation of company code, defining the company, defining what are the business functional areas, what are the different types of products they deal with, what are the functions, sales, purchase, your production, all these different functional areas, all this you will have to first assign. So all this will be coming under your organizational structure. So organizational structure will basically constitute your company codes, your functional areas, your credit controls, all these things will come under that. Now, second is your accounting, financial accounting, global settings. Now, global settings in the sense, if you have seen in Tally also, there is a setting configuration level, you can make the settings, right? So if you're making some changes at the configuration level, it will be applicable to all the data or all the transactions you enter. You need not actually change for everything. You can make these changes at that particular configuration level or at the global settings. It will be applicable to all that you are entering inside that. So every now and then you need not go ahead and make the changes. Now, this financial accounting global settings will include your fiscal year, financial year, posting period. Posting period means what? Say financial year in India, it is from your April to March. In India, it is April to March. So define the financial period, fiscal year. Posting period means what? At that particular time in which you can post a particular transaction. It doesn't mean that you have cut-off procedures. Whatever in expense that you incur in that particular accounting period, you have to enter it there. And that particular accounting period itself, you should enter. Now, say for example, the company is planning to give an interim dividend or interim dividend. What happens? In between, they'll have to publish their financials, right? They'll have to interim financials they'll publish. Now, this interim financials they have published, they have entered all the transactions, they have published their financials. Now, can they go ahead and again make changes once after they publish this? Say they have published it in June. Now, for an entry they have made in April or in say for example, April. Now, can after publishing the financials in June, can they go ahead and make the change in July? Is difficult. They cannot. So posting period is the time when you can actually post the entries. After that, you will not be allowed to make any change. So you can define that in your global settings, and also the number range, all these extra elements, whatever is applicable to the entire at the transaction or account level, you can go ahead and make. These are all at the global level. You need not make changes every now and then. Every now and then you don't have to select the financial year. Everything, it is already predefined. Now, general ledger accounting, of course, normal thing only. Then tax configuration creation. Tax configuration means entering the rates, EDS, all the rates at which the tax has to be deducted. We can configure that. Then house bank setting up. House bank setting up means what? Say, for example, the companies will have 1 or 2 banks. Every transaction will go through those bank accounts, right? So every now and then they need not enter these bank accounts. So all the transactions will be made through specific. They'll have 2 or 3 bank accounts, and through those bank accounts they'll be making all the payment to the vendors. They'll be receiving all the amount from the customers. All this will be coming to these particular bank accounts. Now they can configure that. They can set up this as house bank accounts, commonly used bank accounts. Then bills payable, bills receivable, they can configure asset accounting, fixed assets, keep track of the fixed assets, how much has been there in the beginning, how much purchased, disposed, and whether depreciation has been charged accordingly. They can take care. Then integration with the sales, distribution, material management. Now, as I told you, whenever there is a particular sale happening or whenever there is a new material being procured, every time any of the stock inventory is being procured, raw material is being procured, whether it is being sold to a customer, the first effect will come to the module of financial and accounting, right? It will be reflected in the sales as well as it will be reflected in the financial. Whenever there is a purchase, in the purchase, material management as well as in the financial accounting module, it will be reflected. So this is yet another feature, integration with your sales and distribution. Now, this module, very, very important from the exam perspective. What are the features of the financial accounting module? First is it will help to track the flow of information within a particular organization. So once you are able to track how the financial data flows, better decision making can be done. This particular information is not restricted to one particular department, right? So this particular financial information will be there in different departments. So it has to be integrated. All the information from different departments is integrated so that they are getting a clear picture for better decision making. Then creating the organizational structure. As I told you, company codes, your credit periods, all those things you can do. Then financial accounting global settings, your fiscal year, posting periods, document types, all this you can do. General ledger, fixed asset accounting, bills payable, receivables, configuration, setting up the EDS rates, tax rates, then integration with the model. So this basic features easy only if you are understanding the concept, you understand the normal P&L balance sheet, so you will be able to write this module. Nothing big in that. Now, next important module is called as your controlling module. Now, before that, SAP, you don't call it as SAP, you call it as SAP. SAP, we have 2 different modules combined together. FICO, we call it as SAP FICO. FICO means finance and your controlling module. So normally these 2 modules are used together. See, if you have a finance module, automatically you will have that particular controlling module also. Why it is used together is, Say, if financial module or a financial accounting module caters with respect to the external requirements, that is your financial statements preparation, raising your invoices, collecting the information from different departments, your controlling module is basically with respect to your monitoring and control purpose, that is for the internal requirements. Say if there is a product being sold or if there is a product being manufactured. Now whether the product is manufactured or whether the product has been manufactured within the budget allocated to it. So whether the expenses are within the budget or whether the revenue generated is as per the forecasted profit. Now this you have to do a comparison. This will be done by the controlling module. The financial module doesn't do that. Financial module is, it will actually have track the flow of the financial data, integrate with different modules, collect the data from different modules, process it, accounting, recording of transaction happens. Now, how do you compare whether whatever happened during that course of year, it is as far as what the management has budgeted or what is the forecast? Now you have to compare. Now this will be done by the controlling module. So these two are complementary to each other. If you have a financial module, automatically the control module, whenever an entry is posted in the financial module, the same will also be there in the controlling module. It will check whether this particular, say, advertisement expense, if this advertisement expense is within the budget allocated for that particular quarter or for that particular half year. If not, it will be allocated. Now this is a main concept of your controlling module. Another very important topic, mainly relating to monitoring and coordinating and optimizing the process. So tracking, recording, all this happens with your financial module. Monitoring and optimizing, comparison to make sure that it is within the budget, it is within the, or the particular profit is being achieved as per the forecast. All this will be done by your controlling module. So controlling module basically deals with two things, cost element and cost center accounting. Now, cost element accounting is cost center, say for example, if you have say for example pharmacy or maybe cafeteria also you can take. Say all the expenses relating to this particular cafeteria or the mess or canteen will be put under one particular cost center called as kitchen. A kitchen or cost center kitchen will be created, it will be put under kitchen. Now, under kitchen, you will have different elements, right? One relating to provisions, one relating to groceries, one relating to food grains, one relating to utensils. Different elements of cost will be there. Now, this constitutes your cost element accounting. Element by element, account. Cost center is all the cost elements which can be grouped under one cost center will be put under one head. So your controlling module basically deals with cost element and cost center accounting with respect to cost. With respect to your revenue, you have profitability, profit center accounting, etc. Now, activity based cost. What is meant by activity based cost? Activity based accounting. I haven't checked your doubts. Okay, let me just check that. What is I didn't get you. Where is it? COA. Okay, this one. Okay, under the financial, okay, COA is, this is your chart of accounts, creation of chart accounts, so it actually comes under your general ledger, not under your financial global settings. I think that's by a mistake. It comes under your general ledger accounting, chart of accounts, your account groups, your account heads and all those comes under your general ledger accounting. It's not under your financial global settings. I'm sure, I'm actually surprised how Radha is able to, I think the whole session, I think these examples will come very naturally, I guess, every now and then. Yeah. Any other? Guys, are you able to understand so far? Are you all able to understand? Okay, fine. Now, activity-based accounting means depending on, say, for example, a particular, depending on how much a person has worked, depending on the number of hours he has worked, then he'll be paid. Activity-based accounting. Internal orders. Internal orders means what? Say, for example, um, what example can I give you? Yeah. Say in the hospital, say if a person is there in the ICU, critical care unit. Now, whenever a person is admitted or is in the ICU, intensive care unit, what happens? Every day morning, normally morning time, the doctors will be paying, they'll be visiting the patient, right? They'll be going and checking the patient. Now, every day morning, the doctors will come for rounds and they'll be checking the patient. Now, the doctor, say for example, a person is in the intensive care unit, he's having say he is undergoing a heart surgery or a person who has just undergone a heart surgery. Now, for this particular person, it is not only the doctor, cardiology person from the cardiology department comes, right? A person from general medicine, a person from emergency medicine, also a nephrologist. Many people will be coming, right? It's not just one doctor who is coming because they want to check the total well-being of that particular person. There'll be an anesthetist. So many people will be there, right? At the time of surgery also there'll be many. So now what happens? This say once you are getting the bill, say once you're getting the bill for that surgery or post-surgery, your bill will have consultation fee with respect to the cardiologist, with respect to the general medicine, with respect to emergency medicine. So many bifurcations will be there. Now, when you go ahead and say that I will not pay only I'll pay for the cardiologist. No, it is all inclusive, right? These are all internally managed. It is not separately for the, as a hospital as a whole, your bill will contain the facility or the particular, even though it is, you are admitted as a patient for a particular heart disorder, you will be utilizing the facility or utilizing the services of other doctors also from the pharmacy, the medicines they get from the pharmacy. All these things will be used or will be there in your bill. So your bill is this particular patient who is availed this treatment for a heart disease, he has actually utilized the services within the hospital. You cannot pinpoint and say, I have used only this, right? You have utilized the surgery, surgeon's help, the doctors, the cardiologists, the general medicine, the also the emergency medicine, the medicine from the pharmacy. So all this together only will be utilized by the patients. Now this constitutes your internal orders, how the billing is happening. Even though this is pertaining to one specific disease or one specific disorder, he has actually, the patient's bill will be comprising of the services that he obtains from different branches of the medicine, right? So this is again called as your internal orders, how they are being clubbed. Then product cost controlling is how the product cost, whether it is within the budget or not, check for that. Then profit center and profitability analysis, you are allocating the profit with respect to a particular element. Say for example, ITC Limited. ITC Limited, take the example of ITC Limited. They are into FMCG goods. They are into your classmates notebooks. They run a chain of resorts. They have also software services. They are into different businesses, different segments literally. Now, if you are accounting with respect to one particular segment, what is the total profit from the segment, classmates notebooks, and it is called as a profit center accounting. Each and every segment wise you are accounting. Now, all this comes under your controlling module. So controlling module basically checks whether each and every transaction, whatever is recorded in your financial module, whether they are within the budgeted limit or whether the profit segment wise or even business wise, whatever profit they get, whether it is as per the forecasted profit. So they are mainly dealing with the cost and revenue elements. Cost center, cost element accounting. As a whole is cost center, each and every element of cost inside that, your cost element accounting. Then activity based, internal orders, product cost, profitability. So all this will be coming as a part of the controlling module. Another module which has to be read together with your finance module. Now, Next is your sales and distribution module. Now, what is important here is the total flow, or what is the total process involved is very, very important as far as your sales and distribution module is concerned. More than the features, it is a process. Now, for a sales and distribution module, now what is meant by pre-sales activity? Yes, cost center. Within that, each and every element you are defining, right? Cost element wise. Cost element wise, for each and every cost, for each and every element, you are allocating the cost. Or separately also you can do. Without that, separately element wise also you can do. Or you can put a cost center and then also you can separately do. So either way it is done, but normally we go for a cost center. All the costs related to one particular head will put in that. It is actually easier. Activities done before the sales. Yes, activities that is done before the sales. Advertisements. Yes, advertisements. You have advertisements, marketing, campaigns, samples. So normally when you go to the malls, you get these samples, right? You go for take the samples. You'll check whether it is good enough or not, and then only you'll actually buy. Especially with respect to these candies. I'm sure you would have done that, right? So all these pre-sales activities, how they are getting the order from the customer. So it could be your marketing campaigns, it could be related to offers, small buy one get one offer. Say sometimes even say before they are putting up a sale, they'll be putting 10%, 15% discount if you're buying this. Or if you're buying two products together, you'll be getting 100 rupees off. So there will be pre-sales activities, giving the samples. All these will come under your pre-sales activity, how they are getting that particular order. Now, once the pre-sales activity is being done, what happens? Next is they'll get the sales order. They'll have to get the sales order. Now, once they get an order for a particular product, what is the next thing that you have to do? Check whether the particular product is there. If it is there, you can directly deliver it to the customer. Else, what happens? You have to go manufacture that product. So in order to manufacture that product, what is the first thing? Check whether raw materials required for that are present. If not, go purchase the raw material. Inventory sourcing. Sourcing the inventory required to manufacture that. Sourcing the inventory sourcing. Then once after inventory sourcing, manufacture happens. Then once the manufacture or the particular product is ready, it will be delivered to the customer, material delivery. And finally, what happens? Billing. Billing that particular customer and receiving the amount and how it is updated in your systems. So the total sales and distribution module, basically there are 5 to 6 processes starting from pre-sales, that is those activities done before getting the order. Then once the pre-sales activities are done, which includes your showing them samples, contacting, getting appointments from them, giving them a demo of that particular product, whether it will work. Now, even you have the salespersons coming, they'll be showing a demo of the product. All this will be coming under your pre-sales. Then getting the sales order. Say, for example, what is the product that they require? What is the quantity? What is the time within which they require the product? The delivery, the address, all these things will be taken. Then inventory sourcing is getting the necessary raw material for producing that particular product. So how it is there, whether it is already there, then it can be delivered. Else you need to procure it. Then material delivery means what? As per the order, as per the billing address provided, you are delivering it to that particular person. And finally, billing, raising an invoice against that particular delivery of material, and finally receipt from the customer, getting the amount customer. So this is your basic sales and distribution module. What is the process involved? So here the most important aspect is the process involved. Process carries a importance. So in your sales and distribution, give more highlight to the process. Then here also we have the key features which is similar to your financial module. I told you organizational structure, pricing, document types, billing types, tax is more or less similar. What is different is the process. So that's why I told give more importance to the process, because feature you can actually write similar to your finance module. Now next is called as your material management module. So we covered financial and accounting, controlling and sales. Now the fourth one is material management module. So material management module means what? How the particular procurement of raw material happens, how the raw material procurement happens, how it is managed internally. This is being dealt with a separate module called as material management module. Just 1 second. Now, normally, how does this procuring of raw material happens? Is it just a very easy process? Just like that, can you just go ahead and order whatever raw material is required for the company, or is there any particular flow or a process defined? Is there any particular process defined for that? This process required goods, make the goods ready for sales. Okay. Packaging, labeling, pre-sales activity, branding, and okay. Yeah. This branding is an important one, yes. Is it just a one-time activity? Is it just an easy activity, or it takes a lot of elements? How does it happen? Normally, there is a chain. Chain the sense, say for example, I told you whenever a particular order is placed by the customer, if the particular product is readily available, it will be delivered immediately to the particular shipping address within that particular time, whatever quantity he has ordered for. Say if that particular product is not there, then starts the headache, right? Then they have to go with the manufacturing. Say, then they're going to manufacture. If first thing is the production department will go check with the stores whether the particular raw material required for producing is there or not. Now, if it is there in the stores, well and good, they can go ahead with the production. If it is not there, what is the next thing? They have to go confirm there is no raw material available in the stores. They have to raise a purchase requisition. The purchase department has to go ahead and raise a purchase requisition. They have to request for the purchase of this particular raw material with the purchase department. Now, once this purchase requisition is placed, the purchase department, the production goes where sees whether the particular raw material is there. It raises a purchase requisition. This purchase requisition will be reviewed by the purchase department. They'll see whether it is actually required or not, whether there is any overstocking happening, whether it is a perishable goods, whether this much quantity, if they are purchasing, will it get spoiled within that particular time. So all these things, all these considerations they will take, and then they'll go ahead and allow, or they'll actually allow for purchasing that particular product. The purchase requisition will be approved, it will be evaluated, and then it will be approved. Then just because it is approved, that doesn't mean you can go and get the product. You will have n number of suppliers. You have to go take quotations or tenders from them. Everything you have seen in the newspaper, right? Getting the tenders or quotations from the people who are willing to take up a contract work. Now, why do they go for this tenders or bidding process? Because they want to see what is the least price at which the particular work gets done, right? So they want to make sure the work is getting done at the minimum cost, maximum good quality materials are being used, and the product is finished within that particular time. So taking these factors into consideration, you go and select the suppliers. So any out of the vendor, whoever is submitting the quotation or tender, they're saying this much product of this particular quality within this particular date, I'll be able to deliver. And at the price you say, I'll be able to deliver at 100. Another supplier says, I'll be able to deliver at 500. Depending on the quality and the price, you'll be selecting one of the vendors. So this is your evaluation of quotations, asking an evaluation of quotation. So after your purchase requisition, raising, evaluating the purchase requisition, then asking for quotations, and then you're evaluating the quotations, then you place the purchase order. Then the purchase order has to be placed with this particular supplier. How much is the particular, what is the particular element, raw material you require, what quantity you require, what is the rate, say what is the kg or what is the rate per quantity, then what is the date at which you require that particular product, or how it has to be received, whether the transportation will be taken care of by them. All these things will be decided and the purchase order will be raised. And finally, what happens is whatever amount, whatever product that you have purchased or raw material you have purchased will arrive at your godown. In the godown, there will be an entry register, entry invoice register. Once the goods come into a godown, there will be a GRN, goods receipt note. It is a proof that the particular goods has been received by the company. The raw material is received by the company. So there will be an entry at the security gate when the particular supplier is actually supplying the raw material. And once the goods are checked, verified, raw materials are verified that it's the right quantity and quality as per the specified rate, you will be raising a GRN, and then this particular material will be issued for production. And this production, they will start on with the production with this raw material. And also simultaneously the invoice will be raised. Purchase invoice will also be there. Now all these things are coming under your material management module. So material management module mainly deals with the movement of the materials till how the payment is given to the supplier. From the time a purchase requisition is raised and till the time the vendor or the supplier is getting paid, what are the activities will be captured by this particular module. So all these elements will be connected or integrated, all the different systems will be integrated, it will be taken care by the material management module, movement of material. Clear? Just go through this. Yes, Rekha, it's a continuous activity because you cannot actually go ahead and do a stocking, right? Say if it is a durable, the particular element has a long shelf life, then it is fine. What if it is a perishable good? You cannot keep on stocking, right? So depending on the order only you have to do when it reaches a particular reorder level, or when it is if it is a perishable good, as and when it is required. So it depends. It is not a one-time process. It keeps doing. Yes, EOQ level. Yes. Okay, process to procure material. Yes, process to procure materials. Yes, depending on the quotations, it's right. Okay. I think say I don't know, I'm not, I think these things are not visible to you. Okay, so I'm getting all these queries, and now when I'm telling about the real life example that's given by certain students, I think others are, I think Kiran, many of them are giving examples. That is, I think you yourself give examples rather than list and telling us to buy. Okay, so I think that should be your experience, I guess. Day-to-day experience you have given. Okay, fine. I think many of them have given the same examples. Okay, so getting the text, by the way. Okay, getting the vegetables from the market and going bargaining, finally reaching it. Okay, getting the buying done. Yes, a day-to-day example that we normally see, right? Yes. So anyway, the concept is driven. That is the end goal. Now, next is your plan maintenance module. Now, what is a plan maintenance module? Now, the main purpose or the main agenda of this module is to make sure that there is no breakdown happening. So when they are getting a particular order, the order should be completed within that particular time without any interruption. There should be a efficient planning of the production. So for this, to make sure there is an efficient or timely completion of that particular production activity, you have to plan the production ahead. You have to make sure all the equipments that is required for converting this raw material to finished goods are working properly, right? It is maintained properly, maintained on a regular basis. For this, you have something called as a plant maintenance module. Yet another, normally this module will also be there from all those dealing with production activities. This particular module will also be there. Main objective. Now here what is important is the objective. What is the objective of your plant maintenance module? I told you for sales, the most important thing is the process. Material management, again the process. Now here it is the objective of the module. Main thing is you have to ensure that the minimum breakdown happens. There is no particular breakdown. Work is going smooth. All these equipments are in a good working condition, and also say for example, Yes, optimum. Say, for example, how much we are investing in these particular equipments or this particular, say, machines. It should be giving the optimum result. Optimum result means I should be able to fully utilize that. So it should be in proper working condition, and also it is not just it is working, but at the say, for example, the machines are working, but the speed at which it should work or the number of products, the number of products within which time it should give, that is actually less. It is working, that doesn't mean it is it is being utilized optimized in an optimized way, right? So if it is being, if it has to be used in an optimized way, it should not only work but also make sure that it is giving me enough return. Say I have to say, if I am buying a lathe, 5-6 lathe machines for 1 or 2 crores, I should be able to recover the cost from whatever I am producing. So that is my end goal. If I am investing so much, if I am incurring this much capital expenditure, I should be able to obtain or recover the cost of this from whatever I produce from my day-to-day operating activities, right? So that also we have to make sure. So minimum breakdown, good working condition, it should be there, and also to get the optimum return from these particular machines, the basic objective. Now, others are cost-efficient maintenance method, how the maintenance can be done, whether it is risk-based, preventive maintenance. So we have this maintenance. We'll see what are the different types of maintenance. Say risk-based or preventive maintenance. Preventive maintenance, like you are servicing your car. Even if there is nothing wrong with the car, you give for the service every 6 months to make sure that nothing happens, right? So it is like a preventive maintenance. Risk-based maintenance means if you have some fault, you'll fix that. It's a risk-based maintenance. Now, optimum profit without any interruption or hindrance, making the optimum profit, getting the maximum return by proper utilization, and outage planning. That is, in case if there is any breakdown, how well you can overcome that and start with the production, and so that the production is not hindered within that particular time agreed for sourcing that particular order, whether you are able to give that. So that you have to make sure within that. Now, just you can just go through, read through this. What are the different kinds of reports? How, where it is stored and all this. Read through that. Now, mainly your plant maintenance report. So here the another important area is your plant maintenance report. So plant maintenance report is mainly relating to the maintenance activities. So if you have certain machines or equipments which require regular maintenance, how these maintenance activities are carried out, at what interval of time it is carried out, whether it requires or not, it is dealing with it. Plain plant maintenance report. So what is the service type that is required for a particular equipment? Say if it is a preventive or it is a risk-based service, at what interval of time you need to give the service. Say if there is any kind of maintenance, say if it requires a overhaul or so any other maintenance, at what time you are giving. All the transactions related to this will be coming under this PM reports. Basically another report generated by this particular plant maintenance module. So understand, this particular module basically deals with preventing or making sure there is a minimum breakdown, maximum or optimum utilization of these machines to get optimum revenue or profit, then making sure it is at a good working condition, and also providing correct maintenance methods, that is preventive or risk-based maintenance, and making sure that there is, in case there is any outage or breakdown, how they will be able to carry ahead with the work. So all this will be covered in this particular module. So main exam point of view, you can go with the objective. Yeah, this is all coming. Yes, I think that is enough with respect to your plant maintenance module. Now next module is with respect to PM reports, that is project systems module. Now project systems module is like, say I am into an app, there's an app development company. So this app development company is developing many apps at the same time, right? It's not just one app they are developing. They are into app development. They'll be developing an app for your, say Ola or Uber cab services, one for resort services, one for restaurant services, one for hotel booking. So different types of apps they are building on a daily basis. Now, these different types of apps that they're building on a daily basis, I can put it as different projects. They are handling different projects simultaneously. So in our particular company also, they'll be having a variety of products or a variety of projects they are handling. So in order to keep track of each and every project or product, they'll have this kind of a module called as project systems module. And for each project, there will be a head. It will be headed by a project manager. He will be having the full responsibility of that particular project. Say if it is an app development project, he will be fully responsible for the successful implementation of that particular project. Now, how it happens is now similar to our sales. We told there are some pre-sales activity, right? So similar to our sales, in your corporate companies also, whenever you have to get, say if you want to get a project, say if you want someone to buy your app, what you don't directly go and sell them. You first give them a demo version. Have you seen a small prototype, a small demo version? You will say minimum features will be there. So if the particular client likes a particular prototype, then minimum features will be there. If he likes the design and the functionality, then he'll ask the enter into an agreement with the company for making that particular app. Now, this particular part, whatever I told you, is coming under creating the templates. Templates means how you will initiate that product. Similar to your pre-sales activity, you are creating a mini prototype or a mini small model. You are showing it to the client. If the client likes it, he'll place an order for that. So how you are getting the projects. Now, once you create the template, you first you get that order. That is, you are getting that project. Once you get that project, you have 10 or 15 projects, right? 10 or 15 apps you have to complete within that particular time. The company has to provide to its customers. Now, the company has to keep track of all these 10 to 15 apps. Now, how it will do? Proper planning and budgeting. What time, what app I have to deliver to which customer, what is the total budget, what is the total man hours required, how much staff I will be requiring, what is the skill set of the people, when I have to release a product, if I am providing any post any maintenance or post after sales service, what is that? All this will be decided. This will constitute your project planning module. So your project module basically deals with how each and every project is completed. So a company may have 10 different projects. So for each project, with respect to each project, how it is planned, how it is the budgeting is done, how the implementation is done, and how it is completed. All these things will be taken care by the project module. Now here the project manager will be in charge of a particular project. He will be the head for that particular project, and he will decide what is the total cost, what is the total budgeted amount for this particular project, when I have to start with that particular project, and what are the materials, say raw materials, or what are the how much resources is required, is there any specific skill set required for completing the development of this app. All this he will do, and then he will finally execute or start with the implementation, and finally the completion of the project. So this particular project systems module is mainly used for companies which have different types of projects or different products that are dealing at the same time. So they have to keep a track of that. So in order to keep a track of that, they'll have a particular module called as a project systems module. Say for example, if it is just one product, it is not always necessary to have a project system module. They are dealing with only one thing, means it is okay. But they are having different projects simultaneously. They are into different business areas. Then this particular module is the must. Project systems module. Just any doubts for the time being, I'll just take it out. Scrap sales, okay, that maintenance of our vehicles, yes, yeah, that was your preventive maintenance, right? Yes. I didn't get that, Kiran. What is it? Project development is like investment records also. I actually didn't understand. Can you come again? I actually didn't understand the question. So far, are you all able to understand? Are you all just like listening to some story? Are you all able to understand, guys? When it's like story only, there's nothing so much technical here. The next chapter will compensate for this because it is fully technical. So, even if you got an understanding by the time we reach the next chapter, sometimes it will go out of your head. But now, this chapter is a simple chapter. Only you have to understand the flow and the business. It is an easy chapter comparatively. Yeah, it is same like you having seven different subjects. Okay, I think seven. Okay, seven or eight. Say, okay, seven different projects. Like for studying for your intermediate, how you are allocating the time. Yes, similar to that. Oh my God, is. I think I need not give you examples. I'll just explain the module and I'll ask you to give examples because you guys are super brainy in giving these examples. You're giving very good examples. So, and yeah, so many examples, really. So many examples you are giving, and I'm actually really happy that you are listening and you're understanding that because unless you don't, if you're understanding only, you will be able to come with examples. So I'm actually happy you're giving so much examples for these things. Yes. Okay, someone is keen on the break. Okay, so then, okay, we'll go for a 5 minutes break. Okay, we'll go for a 5 minutes break. And yeah, after the 5 minutes break, we'll start with this, and also we have to complete the reporting also. So we'll go for a 5 minutes break and then we'll proceed. Okay. So yeah, yeah, so it's a break. Sir? Yeah, yeah. Yes, sir. 1 second. Okay, we'll resume. Okay, so before the break, we were actually seeing few modules. That is your project management module, your plan maintenance module, material management modules, sales and distribution, financial and controlling module. Now, next we'll start with the quality management module. Okay, just try this MCQ by the way before going to the next module. What is the answer here? Yes, in that way, Kiran, it's similar because while planning for an investment, people like calculating the ROI and decide whether to invest or not. Yes, this is like not taking a decision actually, but how you are coordinating that different projects simultaneously. It's not actually taking the decision whether to choose that or not, but within that particular budget, whether you are able to complete or not, you have to check. So say once if you start with that particular project, it might time might get extended, right? Say lack of resources. So, as I told you in the ERP implementation, one of the risks was attrition, right? Employees leaving the organization. Say in between, if say some employees are work skilled, those having the specific skill set, they leave the particular organization. What happens? The project development comes to a standstill. So all this they have to take care, or it is taken care by this particular module. It is basically into how the entire project is coordinated compared with the budget and it is reaching the completion. It's not fully related to decision making, but it also there it is there's a part of that, but not completely related to decision making. Okay, fine. Yes, the answer is B, right? Yes, sir. The answer is B. The answer is plant maintenance module. So once you get a ticket from the plant maintenance module, whatever the particular ticket is raised by the plant maintenance module, the particular resources spare parts will be issued by the material management module. So this is so you with this particular MCQ, you understand there is an integration between the material maintenance and the plant maintenance module. So whenever there is a ticket being raised by the plant maintenance, a maintenance ticket being issued for the corresponding spare parts, the corresponding materials, you have to go. There should be a particular requisition made by the material management module. It has to be converted to the purchase order. All this is done by your material management module. Now, why does material management module do this? Because it is integrated with the plant maintenance module. So now see how the data is flowing between different systems, different modules, how the data is getting shared. Okay, now, next is your quality management module. Okay, now this quality management module basically deals with the quality aspects. So making sure that the proper quality standards are maintained. Now we know we have you heard of this ISO marking the products, ISO marked products? So it is basically a quality check. So before they actually release the end product, there will be a lot of rounds of testing happening to make sure that the project is achieving the particular objective. In addition to achieving the overall objective, there will be quality assurance team, QA teams will be there. What is the main objective of this QA team is they will have this standard best practices, industry best practices will be there. Across industries, what are the best practices happening? What are the specifications? What is the maximum specification for the product, how much better the product can be made, all these will be there. This QA team will be basically dealing with comparisons, best practices, how the particular quality elements are achieved by this particular product, all this will be done by the quality management module here. So basically they are into monitoring each and every process and product and the results, how it is done. And this main element comes is whenever you're procuring materials from your vendor or vendor evaluation. This is one another area of vendor evaluation, checking the quality of the materials. All this will be done by the quality management module. Now this just I have put one slide on how it is actually done on the system, how a particular quality or inspection of this what is done on the system. I mean, you don't have to really go deep into that, just to get an understanding of how quality aspects are ensured. Now, next module is called as your supply chain module. Another important module, mine is important. Now, supply chain module it mainly deals with all the activities starting from procurement of raw material till the end supply to the customer. So, what all happens in between that, everything comes under the supply chain module. Starting from how the raw materials are procured, how it reaches the particular, how the raw material is obtained from the particular supplier, how it reaches the manufacturer, how the product is produced, how this product from the manufacturer reaches the distributors, from the distributors, how it is reaching the individual retail suppliers, and finally how it reaches the customer. So this entire chain has been captured by the supply chain module. So what is the main advantage of this particular module is they can actually streamline this process. That is, it mainly deals with logistics, how you can schedule the suppliers, when you have to plan for the materials. So all these things you can actually customize using this supply chain module. So yes, regarding the transportation, scheduling the customers, how the logistics has to be planned, all this will be done months before. Say for example, if Amazon is midnight, they are starting with the Amazon Great Indian Festival or sale, a new sale, say for the New Year sale or Christmas sale, some new sale has been started by one of the e-commerce sites. Now what happens? Before they start with the sale activity, there will be a lot of internal planning done, right? What all are the products they have to stock, from where all they have to get the products, which suppliers has to provide them the product if a particular customer orders it, what is the mode of transportation, how it is reaching the end customer, within what date. Say if you are purchasing a particular product through Amazon or Flipkart, they'll be giving you a tentative date when you will receive the product, right? So that you can track whether it has left that particular go down, whether it is dispatched, whether it has been shipped, whether it is out for delivery. You can see, right? Different, you can track an order. Similarly, if you are returning that product, what is the status of the return product, whether the refund is issued, all this you'll be able to see now. Starting from how they are procuring the raw material before that particular sale is announced, till how the particular product reaches the end customer, everything will be taken care of by the supply chain module. So mainly they'll be dealing with how to maximize the scheduling, how to get the list of suppliers, how the particular raw material is transformed to work in progress and reaching the end customer. All the activities that is involved, the whole chain will be coming under your supply chain. So supply chain, understand the process, what is involved in supply chain. Now after supply chain, the next module is called as your human resource module, HR module. So this is HR module. Again, understand, easy thing, understand the process. Now HR module, it is not only relating to your payroll computation or say for example your salary computation, monthly salary computation. They have lots of other functions too. Say for example, you have your campus interviews. So once you clear your CA final, you will be eligible for campus interviews, right? So you give your campus interviews, you attend your campus interviews, you get selected in the campus interviews, you get the offer letter, and finally you join a company. Now, starting from that, recruitment process, how they are going to select the potential candidates for the company, giving them a particular orientation session, that is telling them about the company, the organization structure, the appraisal, their policies, company policies, all these things will be given. An orientation session will be given about regarding their travel, official travel arrangements or on-site travel arrangements. All this will be included in the HR module. Your recruitment, the management, organizational structure, who is reporting to whom, what will be your designation, how much, after how many years you will be eligible for a promotion. All this will be dealt in the HR module, in addition to your regular payroll accounting. Payroll means salary computation, then training given to the employees. Now, as soon as you join a company, you will not be put under one particular department. Yes, you will be given a training, a knowledge transfer, KT will be given. So after this training, knowledge transfer session only, then you will be actually put into work. You will be asked to work in that particular department. So training, event management, how it is being given, personal administration, time management, how it is, what, how many days attendance, keeping track of your attendance, all this will be dealt by your HR module. So HR module is not only dealing with your salary computation. It is not salary computation alone. It keeps track of various aspects, the attendance, your advance. If you have taken any advance, like while computing your payroll, they have to deduct that, right? So all your advances taken by the employees is how many hours they have actually worked, whether any training has been provided to these employees, whether the particular person, if a particular person is resigning from that particular company, whether he has served the notice period. 3 months they have to intimate the company beforehand that they are going to leave the particular company. Notice period, have they served? If they have not served the notice period, or certain companies will have bond, right? 1 year you have to stay with the company, else you have to pay this much amount to the company. So if they are breaking the bond, how it will be dealt? All this will be dealt with the HR module. So human resource module is not only for payroll computation, it also deals with your recruitment, training, time management aspects, and travel. All these things will be dealt by the HR module. Now, next, another very important module is customer relationship module. Now, customer relationship module, make sure you learn the key benefits. Exam point of view, key benefits of CRM is very, very important. So benefits of CRM, mark this as very important. What are the benefits of a CRM module? Now, why do you need a CRM module? Any okay, okay, now, okay, 11 subjects merged to 8 papers, just like, okay, 11 big firms are now merged to big four. Oh my God. Yes. Thank you, Aditya. Are you all only giving me the examples, or are you all understanding the process? I actually seriously wish whether I am able to show these examples to others also, because seriously there are beautiful examples given by you, and you have even not even you are okay, from starting from Ramayana you are giving the examples. Okay, very good. Okay, so now, by the way, HR module I have you all understood. Now the next is customer relationship module. Now customer relationship module. Now, have you seen like certain restaurants? Once you visit that particular restaurant, they'll be asking for your birthday, marriage anniversary, certain details, personal details they'll ask. Have you seen, especially with respect to these barbecue restaurants? It's a normal practice. Now, what happens at the time or on your birthday or on your marriage anniversary? They'll be giving you a message with respect to certain offers. Or if you dine 6 times in those restaurants, the seventh time will be a free one. Or even on your birthdays, when you go there, you get a complimentary cake. Cake cutting will be done by staff members. So all these are what? These are all to win back or to get new customers. So once you go, once these things happen, you'll recommend, of course, you are going to recommend this particular, even though the food is not up to the mark, seeing all these services they provide, food is okay, moderate. If it is worse, you won't recommend, as another thing. food is moderate, but you have other complimentary things coming up. So you will at least ask one of your friends to go and try. Yes or no? So potential customers, they want to get in potential customers. They want to retain the existing customers. Existing customers, they give the feedback from. Then sometimes have you seen the chef himself will come and speak to you. He'll explain the dishes. He sometimes will even give you a walkthrough of the kitchen. See, make you see how clean the kitchen is, how they are prepared, how certain things are prepared. So all these things they'll be doing to improve the relationship with the existing customers. Then also winning back from the old customer. Say if the customer is not satisfied, he has given a bad feedback, then certain offers will be given to him. Some complimentary products will be given to him so that he is coming back to that particular restaurant. All these are coming as a part of your CRM. Now, how the companies are dealing with the CRM, because they take lots of information from the customers, take the feedbacks from the customers, they value their customers a lot, right? So each and every interaction of the customer will be fed into the system. It will be circulated, and each and every whatever the customer feedback or whatever the customers are liking about that particular product or particular service provided by the particular restaurant or company, it will be properly tracked. They will be given complimentary offers. All these things will be done at the system level. Now, every now and then, have you seen for New Year or for Christmas or for Diwali, you'll be getting the sale announcements in your mobile. If you are given your mobile number accidentally, every now and then you'll be getting, right? And also if they have any offers, every now and then they'll be putting in the offers also. So even if you don't want to buy, seeing these offers, you'll be just tempted to buy. Now, nothing. If you are browsing through any of the e-commerce sites, one or two products you like, you click on them and view them. If you open any of your social networkings like Facebook, Instagram, you will see the same product displayed there. So even if you forgot about the product, they'll make sure they'll remind you. They'll remind you, and then you will again go click on that, and finally at least 5 to 10 people, if they are remaining, at least one will go and buy that, right? Now, this also happens as a part of your CRM. Now, CRM, the basic benefits is improved customer relations. As I told you, they can win back the old customers, improve the relationship with the existing customers, better internal communication. So whatever data they are getting from the customers, they'll be circulating with other departments also. Say, for example, the sales, the purchase, they can actually customize as per the needs of their particular customer. What is their specification? Maximize upselling and cross-selling. Upselling means what? What is meant by upselling? Say I go for purchasing a particular mobile and my budget is say 20,000. I already have a mobile, a Samsung mobile with me. Now I'm going and showing them, okay, my budget is 20 or maybe 25,000, and I'm telling I already have this mobile. I want a mobile. This is not working now. I need a mobile, something similar to this, a Samsung mobile. Now, have you seen, once they see you have a Samsung mobile, they'll be trying you to go for other products. They'll be telling, okay, this product, Lenovo or this Redmi is now, it is in the market. This is the most selling brand. Customers are very happy with this particular product. We are getting good reviews from the customer. And but the thing is, the price is little bit costly. It is not 20,000. It is coming to around 27 or 28 or 30,000. But it is not very much beyond your budget. Somewhere a little more higher than your budget. But a product is of excellent quality, much better than the mobile you were using. They are trying to make you purchase something, some premium product. Okay, by showcasing that. So understanding your budget, understanding the nature of your product, what are the specifications, they are trying to sell you a premium product. This is called as your upselling. Upselling, trying to sell a premium product. Now, cross-selling means giving you complementary products. Now, say for example, have you seen when you are buying a Redmi mobile, MI mobile, have you seen you get that mobile case along with it? Certain mobile companies will be giving the headphones, certain companies will be giving the case, and these things you or even if they are not giving you, you will go and buy. Yes or no? You'll buy the tempered glass, you'll buy this case, you'll buy the headsets, all these things, even the memory card, all these things, even if they are not giving you, you will go and buy. Now, this sometimes they'll give as a complimentary product. Along with the phone, we'll give a phone case or the headset. Now, this is called as a cross-selling, giving complementary products, enhancing the sale, giving complementary products so that you will go again and buy that particular product from that particular company. Now, this is again another benefit of CRM, understanding the choice of the customer and acting accordingly, and also better internal communication, and also increase in customer revenues. Customer revenues in the sense, instead of doing or giving a marketing as a whole, say just giving just telling like there is 1,000 rupees off if you are purchasing for 3,000, it doesn't attract the customers much. But if you are giving customer specific, age specific, gender specific advertisements, it is sure to attract more customers. Yes or no? General 1,000 rupees means it may not attract, but if you are giving this particular offer to an age group of 20 to 30 who are vigorous shoppers, then sometimes they might go. Now, if you are giving some other kind of advertisement like complementary products to the next age group people, they will be more tempted to buy. Now, depending on the age group, gender, customer needs and choice, you can optimize the market. You can cater to the specific needs. Now, all this will be done by CRM. It actually increases the customer satisfaction and the revenue as a whole. Yeah. So this is another important examination question, key benefits of CRM. So what is CRM? How our main objective is to win back the old customers, improve the relationship with the existing customers and find the new customers. So, and how this particular CRM objective is done by the ERP system and what are the benefits? Just go through the benefits, very, very important from exam perspective. Yes, CRM and HRM is totally different. HRM is mainly dealing with the employees, staff of that particular organization. Okay. It is with respect to their recruitment, their payroll, their training, their resignation. They are dealing with mainly the employees, HR related policy matters. CRM is something related to enhance their sale with the customers, external, third parties, both are different. So there should be two different modules. HRM cannot do the activity of a CRM. These are both two different modules altogether. Clear? CRM mainly concentrates on how to improve the sales, how to increase the total revenue by catering, giving better services to the customers. It is to external parties, not to the employees. SCM versus CRM is, SCM is about the logistics, how the order is fulfilled, just how the order is fulfilled. Say I am placing an order, from the time they are procuring the raw material, how till the time I am getting my order finished, all the things will come under SCRM. So SCM means it will be the raw material procurement, transportation, logistics, your manufacturer, middlemen, your distributors, retailers, all these things will be covered under SCM. CRM concentrate on mainly the post-sale activities or how they can improve the sale experience. How they can improve the experience. Say, even both are like somewhat interrelated. Say, for example, if you want to give a better experience to the customer, you have to make sure that product is reaching well within the time limit. Say, I have ordered a product and the product is scheduled to be delivered on 15th this month. Now, say if I'm getting that product by 12th, I'll be happy. Yes. So it is coming before the date. Now, this you can actually do it by utilizing both the modules, SCM and CRM. Depending on the preference of the customer, if the customer actually is happy when the customer is giving you a good review for the product, when he is getting the particular product before time. Say, have you seen in these e-commerce websites, certain people will be giving review. It was received 2 days before the scheduled time. I'm so happy with that. Now, once they understand this is a customer behavior, they can actually make the particular product to be delivered well within the time. So they have to schedule the SEO. So both can go hand in hand, but not HR and CRM. Yeah. Okay, fine. So clear with this? Okay. Now, just before that MCQ, we'll just see this integration with other modules. Now, normally I told you each of these ERP system, there are n number of modules. All these modules will be connected to one another. So even if there is any kind of a raw material requirement at one particular, say a material management module, it will be integrated with your production planning. It will be integrated with your plant maintenance. It will be integrated with financial. It will have integration at different module levels. So one particular module, if any activity happens, it will be intimated simultaneously to different modules. It will be automated. Now, normally your master data will be used across all the modules. Same master data which is required by other modules, say customer means, it will be utilized across the sales, across the production planning, across the stores, different modules it will be used. Now, common transaction data will also be shared with other modules. But the thing is, whenever you are defining the data in a module, separate vouchers has to be used. That is, for each module, for pertaining to that department, it will have a separate voucher numbering. Now, normally transaction data will also flow across all the modules. Master data, which is pertaining to that particular modules, will also be shared. So this is a normal process. Now, integration points, say material management and finance. This is just one example of how each and every module is integrated. Now, material management and finance, they know whenever you are procuring the raw material, how it is related to finance, you know. Now, material management and production, how it is integrated. Once the material, particular raw material is procured, how it reaches the production, how it is utilized by the production department, whether it is converted to raw material, all these things, whether it is converted to finished product, so we dealt with that. Now, when a new particular inventory or stock or raw material is purchased, what happens? It will be converted to your finished product. Once the finished product is ready, it will be ready for sale. And once it is ready for sale, if it is ready for sale, it will be shipped. Now, what happens? Once it is sold, you have to reduce the total, the inventory from this stock, total stock. From that, you have to reduce the inventory, right? It is already sold. Now, this for these changes, both has to be integrated. Your material management as well as the sales, both has to be having an integration. So whenever there is a sale happening, the same quantity of stock you have to reduce from the material management module, the total stock available in that. So for this, it needs to be integrated. Similarly with quality management. Why quality management? Say you are procuring the raw material from the vendors. Now, there should be an inspection in the beginning, right? So before actually giving it to the production, you have to check the quality of the raw material. So this quality check will be done by the quality management module. Going for vendor evaluation, all these things will be done by the quality management module. Again, you have to use both the modules simultaneously. Last one, the plant maintenance and material management. I already showed you a MCQ. Whenever a particular maintenance ticket is raised, if they require any spares, how it is being connected with the material management module. Material management module, from the time a purchase requisition is raised till how it comes or solidifies into a purchase order, all the things will be dealt by the material management module. Now, this one single module, see how many areas it is linked. It is linked with finance, it is linked with production, it is linked with sales, with quality and plain line. Now, similarly, you will have different integration points within the ERP systems. Now, why this integration has to be done is to make sure that data is flowing across all the departments. It is available to different departments so that they can cater to the customer on a timely manner, or getting the process done quickly and efficiently. Now, so when this many integration points are there, even though there is one single database with proper role-based access control, proper integration points, don't you think each and every business process will be automated and done successfully, rather than having a non-integrated system, every department having database, separate database? Here, the data is at one common place. They can access the data. At the same time, security is also maintained. There is integration points also, which module has to interact with which. Now, finally, your work gets done easily and better resource optimization will be there, rather than going for your non-integrated system where each one has a separate database. There is total mismatch and data redundancy and confusion. Clear? Now, are you all clear with this part of ERP? What is an ERP? What are the different modules in an ERP? What is the different role-based access? What is audit of an ERP system? Now, just go through this MCQ. Try answering this MCQ. Yes, CRM is like building friendship with new persons and improving the friendship with old persons. Very good. Yeah. I don't know anything to say is cross-selling. Okay, cross-selling is, cross-selling is, say, giving them complementary products. Basically, it's complementary products. So whenever you are buying, say, for example, you are buying a laptop, you are getting something complementary to that. Say, for example, you are getting a, uh, say, a printer. Normally, they won't provide such kind of gifts. Say, for example, I'm telling a printer or a wireless mouse along with the laptop. It's a complementary product. So what happens is when companies are giving such, normally there is a tendency of people, those wherever you are getting complementary products, at least even if it is a very small product, you'll be going and buying that. Right? So if we have the same price, almost the same quality, but one particular company is giving you a complimentary product, means you'll go and buy that. So now this is another technique that is achieved through CRM, giving them complementary products and making the customers happy, making them buy that particular product from their company. Yeah, complementary product is what I cross-selling. Oh my God. Yes. Planets in the solar system. Yes. Okay. Now, customer scheduling was done by the admin team member as per the approved vendor list. It comes to which ERP module? Okay. Supply scheduling is one by. Okay. As per the, it comes to which ERP module? Customer supplier scheduling. So scheduling means procuring the raw material months before they announce the deal. I told you, before they announcing the deal, months before itself, they'll be scheduling the suppliers, procurement of raw material, how the transportation has to be done, who are the persons in charge of that, all that will be done. So which module actually does that? Is it inventory? Is it manufacturing? It's not manufacturing, it is supply chain. Supply chain will be dealing with procurement till the order is finished. Order is actually done for the particular customer. Yes, it is supply chain module. Yes, Ashok, supply chain. So we'll move to the next important topic. Okay, we'll just finish off with this and then come back to this. Okay. Now, next area is called as your reporting. So now reporting basically are MIS reports. We have MIS reports, we have data analytics, we have business analytics, business intelligence, we have XBRM, few things. Okay. Now, starting with MIS report, very easy topic. I'll tell you very easy topic if you understand the concept clearly. Now, MIS report is a normal report that is prepared by the management. That this particular report is used by the senior management people. Yes, it is supply chain. Now, senior management people. So how mainly see if you see especially when you are going up the seniority level, say for example CFO or senior managers, they actually don't go for this voluminous records, right? If you give them a 500-page report, they will hardly turn, they won't even look at it. All they want is a single page or maximum 2-page report, which is highly customized, which gives them an insight into the profit, business wise, geography wise, so product wise. They need to have a consolidated view, just 1 or 2 pages, but everything should be there in that. They need not actually go behind all your ledgers or all your financials, nothing. Just 2 or 3 page report, which will give them the insights of the entire company and how their business is going on. Now, this mainly is done by your MIS reports. MIS report is how the information is presented in the form of a report in a meaningful way. Mainly, it is helping the senior management in taking their decisions. So every industry, every business will have these MIS reports being produced, and the management will act upon depending on the information contained in this report. Normally, it is done by used by the senior management or key managerial persons. So normally what happens is whenever they require, they can actually produce automatically. You can collect data from various business areas, and then I can prepare the report. Now, this is a basic kind of report. Now, what is important here is what is the criteria for the information generated by this report? Another examination question, mark this as important. Now, MIS report, what is an MIS report? It is a, this normal report is a presenting the information in a meaningful way. Now, this MIS report is mainly used by the senior managers or your key managerial persons for effective decision making, for tracking the progress. They want to see how the industry, how the business is performing. Now, how should the information be? This is a very important aspect. Now, this information that is produced or that is given by this MIS reports should satisfy 4 different criteria. Now, what are the 4 different criteria? It should be relevant, timely, accurate, and structured. Relevant means what? Relevant means pertaining to their particular business. This pertaining to their particular business or particular product, they should be getting the reports. What time they require, they should get. Now, timeliness is an important factor. Availability at the right time. It is not, it is required. Say, for example, I'm getting a report. But if I would have got the report 1 month back, then I could have prevented this from happening, or I could have improved the sales. But what happened is I am getting the report only at the year end. Now everything is gone. By this time, there is nothing to do for that particular financial year. Now, if I have got this report in the beginning of the year, then I could have customized or I could have changed my business strategy such a way that my profit is more. Now, second is information should be available at the right time. It should be relevant. It should be pertaining to your area of business. Third is it should be correct. Factually, it should be correct. Accurate. It should be correct. And fourth is structured. Structured means what? It should be in a simple and understandable way. I told you not 100 pages of report, just 2 pages of report, highly customized, covering the entire areas, all the business, all the relevant areas of the organization, all the business, all the products, different locations, everything is covered. So simple, easy to understand report should be there, should be available at the right time, should be correct also, and should be relevant or pertaining to their activity, business activity. So this very important one, what is the criteria for the information produced by the MIS reports? 1, relevant. 2, timely, accurate, and structured. So mark, this is very important, and this is another examination question. Now, this now you don't have to bother about this. We'll be covering in the 3rd chapter about data warehouse. Now, data warehouse is not coming part of this. We'll see what is meant by data analytics and business intelligence. Okay, now. Okay. Error of commission. Okay, I forgive you. Okay, for that. It's similar to your report cards that you receive in your school. Fine. Supply chain. Fine. So we have another Rekha. Yeah. Okay. Yes. So now, what is the difference, basic difference between data analytics and your business intelligence? Any inputs? Any inputs? Other than the spelling difference, of course. Anything else? What is meant by data analytics? What is meant by business intelligence? Now, basic differences, though both of them are used simultaneously, like whenever you say data analytics and business intelligence, they'll be used like in place of each other. Okay, but they are different. Now, data analytics is, say you have a collection of data which is unprocessed. Okay, collection of data. Now, this dump data or this from this huge volume of data, it is not easy to find out the information which you require. Yes, it is difficult. Now, how you are examining this whole bunch of data and arriving at meaningful conclusions, or cleaning the data and making them in a readable format, in a reporting format, how it is customized, all this will come under data analytics. So data analytics basically deals with how you're transforming the data from a whole dump of data, how you're cleaning the data, and how you're arriving at a proper, meaningful report. This constitutes your data analytics. Now, data analytics includes predictive analytics also. It has a predictive behavior. It is more into prediction part. Business intelligence does not involve any prediction part. It is purely based on the reports generated. Based on whatever report is generated, depending on the report, you try to make some sense out of it and cater and make the corresponding business decision to cater to the customers. Now, data analytics basically deals with how you are transforming from a set of dumb data, how you are cleansing the data, and how you are getting the meaningful information. Now, from the information that whatever is obtained, how you are understanding, how we are making intelligence out of that particular information, how that information is applied to the business, how you are able to generate revenue from the reports that is generated, how you are able to take meaningful decisions constitutes your business intelligence. Business intelligence does not have a predictive behavior. Data analytics takes into consideration the predictability factor also. Clear? So both are done with the help of specialized tools. Now, most of the organizations these days have data analytics and business intelligence both. Now, example is, say for example, all of you are having this mobile. Everyone has a mobile these days. You have this telecommunication service provider, Airtel, Vodafone. You have this Reliance, Jio, so many. Now, have you seen they will be giving you offers previously? Now also it's there, but previously when this mobile phones were like in the beginning, say 10 years back, you have now also it's still there, but you will have these offers pertaining to the age groups, location-wise offers. Have you seen free messaging or free talk time from night 12 o'clock to morning 4 o'clock? Night 12 o'clock to morning 5 o'clock, free of cost. From this Airtel to another Airtel mobile, everything is free of cost. 1,000 messages from the free. Now, how they are able to give you such offers? Not just, it is not that they are just predicting. They actually take all the data from you. Let us say, for example, all your call records, how much time you have spent, what is the maximum time you spend on calls, whether you are interested in texting or on calls, if you are calling, whether it is IST or within India. So all this, they will be collecting the data. They have this huge dump of data. Now, this huge dump of data doesn't help them. They have to segregate the data, right? They have to segregate the data. They have to segregate age-wise. Say, between 17 to 25 age group, this is the time when people use the phones or mobiles the most. They talk the most during this particular time. Even say evening 5 to 9, 10 o'clock. This is the time. Now, depending on this particular data, they will be able to give you offers. Yes, pertaining to the particular age group, or say pertaining to a particular location, they can give you more offers. Now, this is done with the help of data analytics and BI. Data analytics helps you to get from the chunk of all these caller data that is available to them. They'll cleanse the data, sort the data, remove all the duplicate data, make the data as how they want. They'll arrange the data, say gender-wise, age-wise, location-wise, talk time, how total duration talk. Now they'll arrange the data in a particular format so that we can get some information from this. This is your data analytics. Business intelligence is how the management is acting upon this particular report, how they are utilizing this particular data to take informed business decisions. They are giving you new offers. They are making sure that this particular location or this particular time is the most peak talk time hour. So for this particular talk time, this particular hour, they will be giving you some offers, attracting new customers, right? This is done by business intelligence. So there is a difference. Data analytics takes into consideration the predictive approach. Business intelligence is more on reports generated by the system, how you act upon with the reports. Now, when you are reading from other resources, slightly it might be confusing, but there is a difference. If you are understanding the concept, it is an easy topic. You can score mark. This is another important area. Mark this is important. Now, advantage means So advantages automatically in this example, whatever I told you relating to the caller information, what happens? They are able to give you the right offers, right offers at the right time to the right set of persons. What happens? You tend to get that offers. You tend to recharge for that particular offers. Yes, what happens internally? You have increased revenue. Company is getting more profit, more customers. They are going for this particular new talk time offer. They are getting increased revenues. Operational efficiency is improved. And using this data analytics, they can target the particular customer type. Yes or no? They can give a series of offers, not just one offer. This one offer is for this particular age group, but again, depending on other age group or other location, they can optimize the marketing. Right? It is not just one particular offer for the entire set of customers. Depending on the customer location, they can optimize the marketing, better customer service, addressing their grievance at the right time. Say you see that there is a fall in the customers, or there is a fall in the customers during this particular month. You go for seeking the reason. Why? Because they have lots of grievance issues and it is not addressed in a timely manner. Now, if you are getting the data in the form of a report which has all the necessary details, you can actually provide them better customer service and also quicker response to the emerging market trends. See what is in trend, what is in the market right now, provide the customers with the right product rather than giving them the old obsolescent product. Now, competitive advantage. When you are giving the customer the right product, optimizing the campaigns, automatically your revenue will improve. You will have a competitive advantage over your rivals, right? And overall, it will boost your performance. So there are lots of advantages with this particular data analytics and BI. Both are separate topics, but sometimes when you are reading, you might get a feel that it is both the same, totally different topics, but they are used hand in hand. Now, what are the types of data analytics? First one is called as exploratory data analytics and confirmatory. Now, this is similar to when you go for an audit. Say when you're going for an audit, say the first day, sometimes the partner will come and introduce you to that particular entity, right? Then you will go do the vouching, verification, all the things. You will try to obtain the audit evidence. You will try to explore the documents and records, and you will try to get the audit evidence. Now, this is exactly what is being done by exploratory data analytics. What you do. Now, after you do everything, finally you will call upon your partner or your audit manager and ask them whether it is right or wrong. I have got these many details pertaining to this entity. Now tell me whether it is right or wrong. Should I follow with them? Now, they will be giving you instruction. Now, this is your confirmatory data analysis. It tells you whether a particular thing is correct or not, true or not. Exploratory is more into exploring the data, understanding the relationships, getting more evidence with respect to the data, what you are, as article assistants, what you are doing. Now, confirmatory data analysis is what your audit manager does, whether it is right or wrong. If it is right, they'll ask you, okay, this much is enough, you come back, this is over. If it is not, you go ask them the other details also. So these two, exploratory and confirmatory, one deals with relationships, exploration and finding out the patterns. Confirmatory is understanding whether it is right or wrong. So these are different types of data analytics. Now next one is different terms and data analytics. Okay. Now I am extending the session for another 15 to 20 minutes. I think it's okay with you because we have to finish up this. Okay. Now, related terms, data mining, predictive analysis, and machine learning. Now, data mining is, I'm trying to find out hidden patterns from the data. Say I have a huge volume of data. From that, I'm cleaning the data to generate customized report. The whole process is called as data analytics. Now, if I want to find certain trends or certain patterns or behavior, say I told you the customer age group, say from 17 to 25 the age group, they are going for a particular offer. they are utilizing that offer very well, or they are going for a particular recharge option. Now, this kind of pattern, if I am finding out from the whole chunk of data, the whole process is called as data analytics, and finding out these hidden patterns is called as data mining. I'm finding out this data patterns, this is called as data mining. The entire process of transforming this data from the huge dump of data till the time you're getting customized report is data analytics. Now, this process is called as data mining. Now, predictive analysis is another term often used along with machine learning, but both are different. Predictive analysis and machine learning. Predictive analysis is more relating to predicting the trends, predicting the behavior, whether a particular customer will abandon that particular product or whether this product will click among this particular age group customers. All this is done by predictive analysis. But machine learning means it uses artificial intelligence. It uses some algorithms, computer resources to do computation. It is more into computational part rather than the report generation part. So more into computational part than in the report generation part. Predictive analysis is more pertaining to the customer requirements. Whether the customers will be able to, whether they'll be happy with this new product that is going to be launched or any other choices of the customer, they'll be more in that particular area, predictive analysis. Machine learning is more using, say, for example, have you seen this machine learning? The example is your speech, image recognition, sound recognition, image recognition, the conversion of this speech into text. All this will be done by this artificial intelligence. Even in your medical field, have you seen the surgery is being performed by small robotics? So all this is forming as a part of your machine learning. But predictive analytics also uses machine learning. It also uses, but it mainly focuses on how to predict the customer behavior, how to predict the future events. It is mainly related to that. Machine learning is more into a computational side rather than the report generation side. These are three different elements. Understanding the concept, I think once or twice this also has been checked in your examination. Machine learning, predictive data mining. Data mining, of course, is a very important concept. Mark this is important. Yes. So data analytics process, what I told you, collecting the data. You have a huge dump of data, collecting the data from different, it could be from text, it could be from Excel, it could be from a database, it could be from some other, I mean, say hard disk or something. What are the different sources of data? You're collecting the data, cleaning the data, that is fixing the quality issues, say removing duplicates, sorting, filtering, all these things will be done, and finally you're building a model. You are building a model such a way that you can create a report out of it. So this entire process will come under your data analytics. Now, business intelligence, what I explained to you a few minutes back. Just go through this. Mainly for creating or taking decisions from the reports that is being created. Okay, now, how business intelligence actually helps you? Helps you in the sense for knowing where your particular company or the particular entity stands with respect to the other companies in the similar industry. So what is the customer behavior? Whether the customers are now not interested in the products that you are manufacturing, what is the spending pattern? So whether it is like they are spending more on certain kind of products now, because of this pandemic time, the most commonly purchased product, I mean, few months back was your sanitizers and masks, right? So what is the spending pattern? What is the normal customer behavior? Similarly, what are the threats, opportunities? So how the other firms are performing? All these things will be done, or it can, business intelligence will actually give insights into this. It is not just about the report. It is how you are acting upon the report, how you are analyzing the trend, and how you are able to take informed business decisions so as to improve the business. How you are able to derive or obtain intelligence from the reports that is created, use it for the business. Now all this will be coming under business intelligence. So here basically understand the difference between data analytics and business intelligence. What is data analytics? What are the advantages? Very important. Advantages of data analytics. Now this is an examination question. What is meant by data analytics and its advantages? Then what are the different types? Exploratory and your confirmatory, similar to what the engagement team members will be doing, the articles or audit assistants will be doing. They'll be seeking the more evidence. They'll be going in depth, exploring the data, and whether it is correct or not will be given by the partner. Confirmation will be given by the partner. Now, the same thing happens here also. Now, related terms, data mining, finding out hidden patterns. Predictive analysis is predicting the future trends, how the business is progressing, what is the customer needs, customer behavior. It is more into satisfying the customer related needs. Machine learning is more into the computational part. It uses artificial intelligence, for example, medical fields, and also the sound, image conversion, all these things will be using the machine learning aspect. Now, data analytics, collection, cleansing, and building the model. Three process. Collection, from different sources. It is not just from single source. It could be from your text, it could be from your Excel, it could be from databases, data warehouse, whatever, be it ERP systems. They can collect that particular data, fix the quality issue, cleansing the data, make it available in a readable format, and then finally building customized reports. Business intelligence, I told you, for taking informed decisions based on whatever report is being created. It can include historic as well as new information. All the information, it is not only related to the new information, it can hold old as well as, and mainly it will be taking care of the old, from the past experiences of the customers, or from the past, what is the experience of the company with respect to this particular, but all the previous reports it will be analyzing and then taking a better decision. Yes. Now, this similar benefits you also have for BI. More or less similar only. Okay. Just go through this MCQ. What is the answer for this MCQ? Which of the following is not a feature of BI? Okay, even the faculties does data mining, is it? Yes. And if it is, maybe it may be because of lack of time. Okay. Already it is running short of time, so that's the reason. The answer is yes. The answer is C. Yes, Saurav. The answer is C. It does not have predictive analysis capability. It does not have predictive analysis capability. So predictive analysis is with data analytics. It is not a feature of business intelligence. Clear? So C is the answer. Yes, C is the answer. Yes. No. No. Answer is C. It is predictive analysis. It is not A. It is not D. Information extrapolation means extracting the information from a particular source. Say if you have a report, understanding, extracting the information from that. Predictive analysis, I told you, it is only related to your data analytics. BI is not having a predictive analysis capability. You have a bunch of data, from that you are extracting that particular information, right? Or you have a report, from that whatever is required for your decision making you are taking. That's information extraction. basic thing is here predictive analysis, not report, dashboard. BI tools are there to create dashboards. So if you see here, you see in this, run queries against data, create reports, dashboards, that is there. That is a feature of BI. But what is not a feature is the predictive analysis capability is not. Depending on these reports, you will be taking the decision. Okay. So reports also will be created. Dashboards, you have separate tools for that. Okay. That will be there. But only thing is that prediction is not a part of your BI. Now, the next important topic, again mark this is very important, XBRL. What is meant by XBRL? I think after this one small topic, that is the main crux of this chapter. XBRL means Extensible Business Reporting Language. Now, it's a freely available one. Now, why this is required, I will tell you. Say, we have different regulatory authorities, right? ROC, SEBI, income tax, GST. So different regulatory authorities are there. Now, with respect to ROC, those who are dealing with ROC disclosures and all, you know, there are n number of disclosures, n number of filings that has to be done on a monthly basis. Yes or no? Now, previously, when these reports or these filings were done, each company will do their filings or the report in a manner whatever they know. Say, for example, if they have to give a statement, annual financial statement, their balance sheet, their P&L, they will be uploading it in a format or under the particular heads which they commonly use. Say, for example, if a company has trade creditors of 1 lakh, say 10 lakhs, trade creditors of 10 lakhs. Now, one company will be putting under the head trade creditors. Another company, when they are uploading the financials, the same thing will be put under the head payables, bills payables. Now, another company will be putting the same bills payables, creditors under another head. It is amount due to the creditors or amount due from the company. Now, same amount of 10 lakhs, which is falling under the same head, that is your sundry creditors, your creditors, it is actually depicted in 3 different manners by 3 different companies. Yes or no? But it is one single information. The information is correct. It is 10 lakhs only. It is pertaining to the same head. But how this head is represented is different by different companies. Yes or no? So what happened was this ROC or all these regulatory authorities, they found it very difficult to collate this information. So each and every company will be representing the information in a different way. Although it pertains to the same head, it is depicted differently. Now, in order to overcome this problem, they have introduced something called as the Extensible Business Reporting Language. So this is a freely available one. It is used across the globe. All the most of the companies, they use this particular thing, and many of your regulatory authorities also required particular documents to be in your XBRL format. So mainly it is for exchanging business information in the form of business reporting. Now, how they are doing is, say for example, this is mainly based on like how you do your programs. You'll have syntaxes, you'll have schemas. So now you don't have to go deep into those technical terms, but normally when you're writing a program, say when you're writing a program, say for your video games or something, there'll be a program written, right? So in the background, there will be some program for apps. There will be program written HTML. Using HTML, they will be writing programs. Now, all these programs will have syntax, schemas and all. Similarly, this particular language also has syntaxes, schemas, all those things. You know, don't get into too much into the technical detail. Now, only thing is, it is a globally accepted language in order to exchange business information between the systems. So they wanted a common format to be followed by all the companies so that they get one view of the information. So for this, they are using the Extensible Business Reporting Language. Here, say for example, sundry creditors, amount due to the supplier, trade payables. It is given under different heads by different companies. Now, does it all mean the same? Means the same. But how each company is reporting is in a different way. Now, in order to get a uniformity, bring about a uniformity, they formed or they came up with something called as Extensible Business Reporting Language. Your business information can be exchanged effectively in the digital platform. Clear? So this is freely available. There is only one particular standard here. Now there we have something called as a taxonomy. Taxonomy means what? It is like a dictionary, like you have your dictionary, right? You have your dictionary where you can see all the meanings. So here also it is a dictionary of your reporting or your accounting terms. Of your accounting or reporting concept, you have a dictionary. Say under that, if you see your sundry creditors, trade payables, amount due to suppliers, all should be put under one particular taxonomy called as accounts payable. Accounts payable is a taxonomy defined. So it is like a dictionary which defines the accounting terms or the reporting concepts. So very comprehensive definitions it has. Now, whatever terms you use while you're doing the reporting, all this will be defined in this taxonomy. So it is reusable, it is all will be defined. Now, this taxonomy alone is not enough, right? So even if you have this accounts payable, there should be some figure attached to this, right? So if you are putting sundry creditors 10 lakh, trade payables 10 lakh, now similarly when you are writing accounts payable also, their amount should be there. Now this process of assigning this amount to this particular taxonomy. Now the taxonomy here is accounts payable. This process is called as tagging. In your Facebook, you will tag, right? You will tag the friends. You will tag your friends or whoever is there in the picture, you will tag them. Now what you are assigning their names to, or you are making sure that the others are knowing that this person also comes or this person is present in that particular picture. Now same thing happens here. Under the particular taxonomy, whichever is defined, you tag the particular numerical field. This process is called as tagging to the respective taxonomy. So taxonomy is like a dictionary. Whatever terms you are using, it will be all put it under one single head. So it will be defined. So all these terms will be defined here under the taxonomy. And in the taxonomy, you can tag it with the correct financial data. Whatever is the amount, whatever is the financial figure, you can tag it to that. Okay. Now, one of the advantages of this XBRL is it is like different systems between different information systems can interchange. It is a globally accepted one. So, and also there are various features of this XBRL. So that is another examination question. So examination, one of the question is what is meant by XBRL? XBRL, when you are defining, state what is meant by XBRL, what is meant by taxonomy, what is meant by tagging. XBRL tagging. Tagging means how the financial data is tagged with the right accounting taxonomy. And the last one is with respect to, now this is just for an illustration purpose. You can go through the slide. When you're going through the slide, you can go through that. How the information is taken from different parties, from different elements, and then how it is. Now, basic features, this is another examination. So they can ask you what is meant by XBRL, explain XBRL, what is meant by taxonomy. It is a dictionary of these reporting elements, accounting terms, and how we are assigning a financial figure to this particular taxonomy is called as tagging. And this is a globally accepted business information sharing medium, and it is freely available also. Now, what are the features? Features is, first is clarity. Clarity means what? I told you taxonomy has various definitions. It is like your dictionary of your accounting terms. Whatever term you use in your report, it will all be assigned to one particular taxonomy. So you have these definitions which is reusable. It is used across different reports, not only for your report. It is used across different reports. It is reusable. Testable. Testable means what? It will not allow any wrong data to be entered into the system. Similar to your, I told you, audit of ERP, we learned audit of processes. Yes or no? We learned audit of processes. Audit of processes, we learned functional audit and input validation. Under input validation, I told you how the system is preventing you from entering the wrong data. Yes, if you are entering a special character or you are entering a numerical figure in a place where it is meant for alphabets, it will throw an error. Now, similar thing is also a feature of your XBRL. It is testable. There is a review mechanism. It will not allow any unwanted or wrong data to be entered. Flagging mechanism. If there is any unwanted or not not required for that particular set. Some data is there, it will be flagging also, it will highlight also. So all these features are also there in XBRL. Multi-language support means it can be converted, translated to different languages. Same. Software support means it is not only used in one particular country or one particular entity. It is used across the globe. So you have n number of vendors who is providing support to this. So you have unlimited vendor support from different suppliers. So even if you are stuck with any issue, you will be getting support without any issue. So these are the basic features. One is clarity, that is mainly relating to your taxonomy. Taxonomy is nothing but a dictionary of your accounting or your reporting terms. As I told you, how your creditors, how your amount due to suppliers and your trade payables are all put under one head called as accounts payable. That is your taxonomy defined. Now, it is testable. Testable in the sense it will not allow any wrong data to be fed. Will not be allowing any wrong data to be fed to the regulators. There will be flagging mechanism, review mechanism, multi-language support can be converted to different languages, and also there is a strong vendor support because it is not only used within one particular entity, it is used across the globe. Now this features of XBRL mark is very, very important. Another examination question here. Now just try answering this. Try answering this. It's a direct question. Yes, XBRL is multilingual. Yes, 1,000 different names. Yes, that's. So what is the answer for this? Suspicious information, flagging, review, unwanted information will not be fed into the system. Now, what is the feature of XBRL here? Is it taxonomy? Is it strong vendor support or multilingual support? What is the answer here? Answer is clear definitions is pertaining to your taxonomy. Okay, it is not highlighting any wrong information. It is taxonomy under which head you have to place. But if you want to highlight suspicious information, especially flagging, I told you flagging. If you see the second point, testable business rules, here it is highlighting if anything is entered wrongly, if there is any suspicious information, flagging will happen here. So the answer here is testable business rules, not clear definitions. It is testable business rules. Okay, there you can actually review. The flagging mechanism is also available. Clear? Strong software support deals with the support you obtain from the vendors. Now, whenever you are entering something, whenever you are doing a reporting using XBRL, whenever you are entering a wrong information, there should be some mechanism to correct it, right? So that is done by your testable business rules. Okay, it is not related to clear definitions or strong software support. Understood this? Okay. Now, who all are the users of XBRL? So as I told you, all your regulatory authorities, ROC, SEBI, income tax, all these regulatory authorities will use that. Companies, government, your data providers, analysts, accountants, all of them will be using XBRL. So this, who are the users of XBRL also, you can mark this as important, especially regulators, companies, government, one group. Then your data providers, investors and accountants. Now, next, small one topic. With that, we'll wind up the session. That is your regulatory compliance mechanism. Okay, so what is meant by compliance is you want to conform with a particular rule. Now, why this compliance is coming into picture is, now whenever you are using a particular software, say especially with related to regulatory compliance, now we know whenever we are preparing our total income computation statement, normally we'll be comparing with the accounting information, right? We'll be seeing, say for example, you are given depreciation, 60% depreciation you are given for computers. Now, as per your Income Tax Act, 40% is allowed. Now, if you are utilizing that particular information for income tax purpose, you have to make sure that you are giving 40% depreciation only. Yes. Now, what happens if you are maintaining these data in two different softwares? One for your accounting, one for your tax. Now, that is mainly being dealt with the compliance and regulatory requirements. Now, different types of compliance, just read through that, nothing too much important, applicable to all. Say specific means GST. GST means this particular compliance or this GST filing will be applicable only if your total turnover crosses a particular limit, right? So this is example of a specific compliance. Specific compliance. Now, for general compliance means whosoever total salary is greater than 2,50,000 will be subjected to tax. Now, there are compliance basically general and specific. Now, the examination point of view, the point is using the same software for accounting and tax and using different software for accounting and tax, what are the benefits? Now, this is an examination perspective question. Now, what happens if you are using one single software for both doing accounting and for your tax computation, or only if you are using a tax compliance software? Now, what is the advantage? Now, this is one small portion given at the end of your chapter. Now, which one is easy to operate? Easy to operate means if you have a particular software only for doing your tax computations or compliance, now that will be actually ease of usage is better because you don't have to worry about the accounting part, right? Only compliance with respect to tax will be fully taken care of and will be easy to use also. So ease of operation wise, your tax compliance software is better, and also features and facility only related to tax compliance, it will be there. So more exclusively pertaining to tax. It is not taking care of your accounts also. It is only pertaining to tax. So features and ease of use wise, a particular software, if it is pertaining only for tax compliance, it will be more useful. Whereas if it contains both accounting and tax, it will be difficult to use because both the places you have to make the entries. I mean, say for example, it is software is integrated, it is less, what happens, it is very, very difficult. Again, it is not only for your tax compliance. So you will have limited features. Now, number of features will be more when you have one particular software only for tax compliance. But accuracy wise, which is more accurate, the one having both, right? One having both. Say for example, if you have accounting and tax in the same software, you need not do a reconciliation every now and then. See, in this case of depreciation, I told you, if it is 60%, automatically it will be taken as 40% because both are integrated in the same software. But if you have a separate software, is one for tax compliance, then you have to do the reconciliation every now and then. There could be mismatch. And similarly, time, say if you want to transfer the data, time required will be less because both the compliance, tax and accounting is in one single software. So all the activity is done in one single, so you need not actually go transfer, take the data, accounting data from here, transfer it to a tax compliance software. So that much of time is being saved. And also cost wise, if you see, with respect to a tax compliance software, your cost is less because the number of features is only respected to the tax compliance purpose. It is not taking into consideration the accounting. But if you want to include or integrate the tax compliance feature in your accounting software, then it will be more costly. So cost wise, tax compliance is better. Effort wise, tax compliance alone is better. Compliance wise, again, it is more for your tax compliance. But if you see the accuracy wise, and the time required for transferring the data, if it is integrated, it will be better because there is no need of a reconciliation. There is no need of transfer from one system to another. It is already integrated. So the total time taken is less. So other than that, if you go for an individual compliance software, that will be better. But accuracy and time wise, when it is integrated in one single software, it will be better. So this is your last part of the chapter, the difference between, or what are the features between your accounting and tax compliance software together and only tax compliance software. Just one last MCQ before we wind up the session. I haven't left any topic in your study mat, so I've taken a little more time. I'm sorry for that, but I'm sure it will be helping you when you are going through this PPT and the study mat. Just try answering this MCQ. What is the answer for this? Pivotal advantage of using an integrated one over a tax compliant one. Easy to operate, of course, it is a tax compliant one which is easier. Features, more compliance features with respect to tax will be there in a tax compliance software. Cost, tax compliance software will be less costly. But what happens with the time and effort? Data sharing, time taken for transferring the data is more if you are using two different systems, right? So integrated system, the basic advantage is accuracy and the time taken for transfer. So here the answer is time and effort. Yes, the answer is time and effort. Yes, C, time and effort. Okay, so fine. So I think we have come to the end of this session. So were you all able to understand, either get a broad overview of what this whole chapter is now? If you are going and reading the study material, will you be able to understand it properly? Yes? How was the session? I know it is a little bit fast towards the end, but it is not ease of operation. Ease of operation is better for your tax compliance. If you see, ease of operation is more for tax because they need to only deal with the tax compliance part, right? But if you see the time and effort, it is more for your tax compliance. So that is a disadvantage. Okay, fine. So then we'll wind up the session, guys. Thank you so much. Thank you for listening. Any doubts, please mail in your queries also. We have, I'll be showing you after next class, I'll be showing you the particular mail ID where you can mail in your queries. If you have any queries in which I couldn't address during the session, you can please mail me there. Okay. Thank you, guys. Thank you. Yeah. Thank you, sir. It's done.